Namaste, hello, hi. Here we go live on WebEx, YouTube, and Facebook together. It's my privilege to host you all for the next 3 hours. I'm Vikesh Walia, Regional Director, Institute of Directors, Western Region from Mumbai, India. A very good afternoon, good morning, and very good evening, depending upon which country you have logged in from. A very warm welcome to our chief guest, Shri M.R. Kumarji, Chairman, LIC. Our guest of honor, Shri Amarjit Singh Ji, Executive Director, SEBI. Guest of honor, Ms. Renu Karnadji, Managing Director, HDFC Limited. Dignitaries, Lieutenant General J.S. Ahluwalia Ji, President, Institute of Directors, Shri Sailesh Haribhakti Ji, Chairman, Institute of Directors, Western Region, Shri Santosh Jairam Ji, Shri Milind Mongale, Executive Vice President, NSDL, Shri Narayan Jayaprakash Ji, CEO, Century Paper and Pulp, and our keynote speakers, our valued invitee guests, ladies and gentlemen, a very, very good afternoon once again. Hearty welcome to Institute of Directors virtual conference on sustainability and imperative. We sincerely appreciate your huge global participation. The word COVID has indeed been the most talked about word globally in the last over 1 year. And the next to it, the words that have followed are sustainability, ESG, net zero, and BRSR. Hence, the suggestion for the theme comes from our chairman, Shri Sailesh Haribhakti Ji, sustainability and imperative. Before I formally invite Shri Sailesh Haribhakti Ji to give us his welcome address, please allow me to say few words about him. We all know him as renowned chartered accountant and board chair and most sought after independent director whose name has appeared on the balance sheet and the annual reports of hundreds of companies in India for his contributions in those balance sheets. However, I would like to introduce him to you in his new avatar as sustainability evangelist. A brilliant scholar who was throughout a gold medalist, who must have done his CA in less than 500 hours of studies. But in the last few years, he has studied over 500 hours to be India's first ESG certified director. Congratulations, sir. He leads many best known boards as chairman or independent director, including Blue Star, L&T Finance, NSDL, Times of India Group, Mahindra Life Spaces, Ambuja Cement, and Bajaj Electricals, just to name few. Shri Sailesh Haribhakti is a chartered and cost accountant, also a certified internal auditor, financial planner, fraud examiner. He has represented India on the Standards Advisory Council of the International Accounting Standard Board, also contributes on policy matters of Government of India through various bodies. He is highly dedicated to corporate governance and promotes sustainability so very wholeheartedly. Over to you, Sailesh Haribhakti, sir, please.
Thank you very much, Vikesh Bhai, for that very generous welcome. Let me begin by sharing with you my vision and my desire from this fantastic seminar that IOD has put together. But I must begin by thanking our chief guest, Mr. M.R. Kumar, thanking Renu ji for being here with us, and thanking Amarjit for having given us his time. In these three outstanding individuals and in Milind, we have the best of corporate India and the best of the listed universe in corporate India. And sir, Mr. Kumar, we wish you a fantastic outing into the Indian capital market. I have no doubt that LIC will emerge as one of the top most market capitalized enterprises in this country. And all of us, with our full heart, welcome you and give you all our good wishes and support for making that dream a reality. But in terms of the sustainability journey, I must say that LIC did something which was dramatic. Almost, I don't know whether it was a decade ago, but that's what my broad thought process is. They dematerialized all our policies. And today, the extent to which the digital framework is used by LIC is to be seen to be believed. Equally, HDFC has shown us what scale and digitization can deliver in terms of customer experience. And there is not enough words of praise that I can bestow upon Citi for having taken the bold, very bold step of making the top 1,000 corporates in India by market cap voluntarily take on the BRSR obligation. And then that voluntary obligation will turn into a mandatory obligation after 1 year of actual reporting. I'm delighted to see the galaxy of speakers we have from all over corporate India. And I'm sure that we will have a very, very fruitful discussion this afternoon. I'll only leave 3 thoughts on sustainability for everybody to chew over. Let us, as consumers, completely dedicate ourselves and commit to very conscious consumption. That is a critical impulse to making the sustainability story truly successful. It starts from us, each and every one of us as consumers. The second thought I would like to address is that energy transition to renewables must happen in our country at a far more rapid pace. We are at about 11 to 12% in terms of renewables today. The inflection point has already been passed. The cost of generating a unit of electricity from renewables has fallen below the per unit cost of coal. And to my mind, that's the trigger which will enable us to do the energy transition as rapidly as all of us aspire to do. And in the first bucket, let us all pledge that we will never buy an internal combustion driven car again. All our next purchases will be of EV vehicles, of which the world of 10 billion cars, there are only 300 to 400 million. So we need to take that story rapidly forward in our country. We are the very important bastions of fresh consumption of mobility. And in that, let us pledge that we will dedicate our resources and our consumption to EV cars. And finally, in terms of our land usage, India has an amazing opportunity to switch 5% of its already cropped land to fruit trees and completely transform the map of land use and create the ability to capture and keep captured the carbon that we have emitted. This year, a small NGO that I'm familiar with, called Global Parley, has planted 10 million trees. May that number grow to a few billion trees. The world needs 1 trillion trees to get to below 2. So I would say, let us all pledge that with whatever influence we have, we will make sure that our land is repurposed, reassigned in a way that we can draw down the 2,400 gigatons of carbon that as a human race till today we have emitted. If we don't draw down over 1,000 gigatons in the next 20 years, we may not have a planet to live on. That is our challenge, and that is our opportunity. And that is why this seminar is so crucially important. Welcome to everybody who is associated with this seminar. Welcome to all the participants. You are a very significant part of this whole movement. We all need to collaboratively come together. This is our planet. Let us save it together. Thank you. Vikesh Bhai, back to you.
Thank you very much, sir. Sincerely appreciate your crisp remarks and a very warm welcome to all the participants and the chief guest. Now, I would like to invite Lieutenant General J.S. Ahluwalia ji, who is our President of Institute of Directors. And before I invite him, I would like to introduce him. Former postgraduate in electronics engineering and MBA, he has specialized in engineering support to weapon systems of the Army. He has undergone extensive trainings in various defense manufacturing organizations in France, UK, Russia, and Japan. He is a chartered engineer and a fellow member of the large number of foreign and Indian professional engineering and management institutions. He has also been chairman of the Institution of Engineers, India, president of Delhi Management Association, and chairman of Safety and Quality Forum, Institution of Engineers. His contributions of over 3 decades in promoting corporate governance and building tomorrow's boards are unparalleled in India. Over to Lieutenant General J.S. Ahluwalia, sir. Kindly give us your presidential address. Ravi, is the audio an issue?
Mr. Amarjeet, can you hear me?
Sir, very clear.
Okay. Yeah, fine. So, and Shri Amarjeet, ED SEBI, Mr. Milind, Vice President of NSTL, IOD members, and our honored guests. It's a great pleasure for me to join our Western Regional Office of Mumbai in their regional webinar on sustainability and imperative, and welcome you all on behalf of the Institute of Directors, India. As you know, IOD is a membership-based, not-for-profit association of professional corporate directors, including independent and women directors. Its main roles are to prepare directors, keep them updated for future through training, networking, and a spate of condensed professional journals and publications. We prepare corporate governance practices to have effective future-ready boards, represent directors' issues with government, statutory bodies, and media. Networking is through regional, national, or global conventions, nearly one every month, including one at London, Dubai, and Singapore every year since 2003. Apart from strong training and publication divisions, we are proud to have our Golden Peacock Awards, which are well known throughout the country, and the recently set up Board Research and Advisory, which is helping boards and directors for annual evaluations. Sustainability, of course, is a very important issue with IOD. We have nearly one international conference every year on that subject for the last 15 years. We have one major training module covering this subject in our Masterclass for Directors on their corporate governance courses. We have an annual national award, Golden Peacock Award, on corporate sustainability. And we have a very rich, condensed handbook for directors on this subject, the new one which has been published just 3 months back, the new edition. So today's subject of discussion is really very apt and timely and something which IOD has been working on for many years. The past decade has been a seminal period for sustainability. After Rio Plus 20 in 2012, the UN General Assembly adopted the United Nations SDG, Sustainability Development Goals for 2030, with 17 goals and 189 targets. This was on 25th of September 2015 to accelerate the development of sustainable and resilient societies. And this really was signed by all, nearly 193 countries signed it in the UN. So the 21st century markets, they had been really inspired by sustainability with ESG as the main DNA of each firm. The boards need a transformational strategy for building a sustainability paradigm, a long-term value creation with reduced environment footprints along the value chain. The 3S, scalable, social, and sustainable, these are interlinked strongly with sustainability. Today, the brand value is on public perception of difference it makes to the society and not its financial value. Sustainability really is a complex concept, traditionally defined as the capacity of an ecosystem to endure. A universally accepted definition of sustainability is elusive and it is expected to achieve many things. Rio 92 talked of it as meeting needs of the present without compromising for future generation to meet their needs. An integrated economic, social, and environmental dimensions of the endeavors into a single holistic concept. That is what sustainability really means to us. Longevity is the fruit of strict adherence to ESG for inclusive and sustainable growth. The main questions that come up are: is sustainability well integrated into any corporate's strategy? What is being done by the sustainability committee of the board, if they have? Most of them have now. How are they managing ESG as a leading indicator for their performances? The global challenges for sustainability really boil down to or condense into food security, water management, energy efficiency, disaster preparedness, resource management, decoupling the materials from growth, and stabilizing world's population to live within the earth's resources. So these are some of the main questions that we have to keep asking. Is this what we are doing, what my company is doing? Is the SDG goals, the 17 goals, which of these are we referring to, which are part of our targets, objectives, and strategy? What are the main advantages of embracing sustainability? A leap to a more sustainable way of operating to benefit companies' reputation, business plans, finances, and to address ethical issues, engage with a wide range of stakeholders. So, number of these objectives that it makes. Boards take lead to respond to challenges, sustainable development strategies, sustainability ultimately ensuring a long-term success of our business. The environment sustainability towards a viable, low ethics, Viable environmental ethics and integrity. This is really the sustainability is talking of. When we talk of sustainability, we talk of three circles interlinking with each other, and we talk of sometimes the three P's also in the same way. So environment sustainability towards a viable environmental ethics and integrity. The social and cultural dimensions of sustainability, citizenship, economic sustainability, poverty eradication, and sustainable livelihoods. Need to leverage technology and social and environmental audits to enable growth for sustainable competitiveness. The top exchanges in developed countries today have sustainability disclosure policies and indicators laid down. So we also have to see how are these indicators operating, how we are going to do it here, and in what manner. It has already been done for the top companies, and SEBI has done a lot to contributed a lot in this. You see, the corporate lifespan itself, I mean, has got reduced. For example, in Germany, a company's life was normally 43 years in year 2000. Today it is 18 years. In France, it was 13 years. It is now 7 years. So the whole thing, we have to consider everything through a life cycle concept, that is from the cradle to the grave, in a way in which in the army we have been always looking for every weapon system. From the cradle to grave concept of why do we need it, how long will it be working, how long we are likely to use it, what our enemy will have, and things of that nature. So from cradle to grave, we have to consider all aspects before we even buy a thing. So are we doing that for our industry, for our products and services that we are providing? So this is how, I mean, one really looks at these things. When you look at this, when you say, what is the vision of sustainability in 2050? When you look at those aspects, you want a socially just and economic and environmentally secure world. You're looking how to stabilize the world's population by then to be able to live over what is available on this earth, on this planet. The energy and resource productivity to become 10 times what it has been in 2000, with 85% as renewable energy and recycling of the waste, which is very vital. Then comes climate change. We are looking at in 2050 the climate to become the same as it was in 1950, 100 years back. So this is what the challenges are really with all of us. What are the committees of our board doing? What are the human rights? What are the literacy, which should be more than 85% by 2050, reduce the rich-poor gap, and have measures and standards for sustainability. In fact, the US is already going for sustainability, making sustainability measurable standards for the community and for the corporates. A very interesting subject, really, and I'm looking forward to a very good, very rich afternoon to go more into these subjects, and wish you all the best. Thank you.
Thank you very much, sir. Very, very inspiring words and good pointers on the theme of sustainability and imperative. Very, very kind of you, sir. I would like to now invite Mr. Milind Mongale, Executive Vice President of and CISO of NSDL e-governance. Our distinguished guest, Mr. Milind Mongale, contributions in process mapping and planning the adoption of ESG practices and SDG alignment for NSDL e-governance has been quite significant. He has been with NSDL e-governance infrastructure for over 25 years in making NSDL e-governance the very backbone of e-governance in India. Huge contributions. Currently, he is the Executive Vice President, Chief Information Security Officer. He heads the Information Security, Cyber Security, Network Security, IT infrastructure, data center functions of the organizations. He has implemented online reputation management system, mobile devices management system, data link prevention system, and multi-layer DMARC and network security architectures. He heads the PKI setup offering e-sign services permitted by Indian law based on e-KYC and public cryptography. He has been actively contributing to mature the enterprise risk management practices for NSDL e-governance and now leads the ESG and SDG alignments at NSDL e-governance. These are huge tasks because these are easier said than done. So the whole technology process of aligning the ESG and SDG down the line is very, very crucial. I would like to invite Mr. Mungale to please address us. Sir, please.
Thank you very much, Mr. Walia, for that generous introduction. Mr. Haribhakti, Lieutenant General Ahluwalia, Ms. Renu Karnad, Mr. Amarjit Singh, Mr. Kumar, all the distinguished speakers and participants, a very, very good afternoon to you all. Ideally, after the note given by Mr. Haribhakti, followed by a very strong perception about sustainability and ESG by Lieutenant General Ahluwalia, I should start with statistics. But I am told that starting with statistics would put people to sleep, especially in the afternoon hours. And so I thought, let me give this a bit of a different perspective. Neither do I want to step over the contents that my fellow members, speakers would be having in their mind, which will follow me. So I thought of giving a very totally different perspective to this. We have to understand we are talking about sustainability, we are talking about ESG. But what has caused these all things? If we understand the root cause, and if we know that one single factor which can help this whole reversal journey that we are trying to make, it would be much, much easier for every one of us to ensure that the sustainability concept not only thrives, but also flourishes. So from that perspective, I'm going to take you back to history. I would like to bring your attention to a few of the very weird terms. Many of you might have heard them, few of you may not have heard them. The first one is Pleistocene. The second one is Holocene, and the third one is Anthropocene. Now, what are these three terms? These are the three epochs of our planet Earth. The first one, Pleistocene, lasted for about 2.6 million years, a few thousand years less. Then came the Holocene, which lasted for approximately 11,700 years. And this was the most important time period of our planet, because this was the time when it brought in a lot of stability to the planet. The stability that was a reason for sustaining the life and life support systems like greenhouse gas trapping or liquid water. This was the time when the temperature variation of our planet was only plus minus 1 degree. For nearly 10,000 years, this stability was maintained. And subsequently, after 11,700 years of this kind of stability, we have entered into a new epoch, that is Anthropocene. Now, few of the people debate that we are still in Holocene, but I personally feel that accepting that we are in Anthropocene would be a better thing to do, especially if we have to do something with regards to sustainability. Now, what is this Anthropocene? This Anthropocene epoch is the time period when human activities started making substantial impact on the planet. And this all things happened because of the very reason why we all are here, the Industrial Revolution. Around 3 centuries back, the Industrial Revolution started. That was the first Industrial Revolution. Subsequently, second, third, and now we are heading towards, or we are already in the fourth Industrial Revolution. What happened during this Industrial Revolution? Lot of prosperity, lot of growth, but at the same time, it also led to lot of urbanization. It led to lot of growth in population and movement of people towards the cities, making the cities into bigger cities, metro cities. Now is the term used, mega cities, where multiple cities have converged into forming one single city. Now, this all has brought a lot of demand for resources for the people to sustain, people to survive. And so the way farming was happening earlier changed completely. This was the time when a lot of deforestation occurred. Movement of people towards the city, change of the ways of farming, deforestation, all these things have caused to what? Pressure, pressure, pressure. It has all caused pressure on the natural resources, and that is what exactly impacted our planet. The very thing which was balancing our planet started destabilizing it. They say in last 60 years, we have flourished much more than last 300 years. The reason was the digital revolution, the industrial revolution, which was the third one. But all this has costed us a lot. This has had a tremendous impact on the environment as well as on the social fabric. Now, these all things are something which has cost us.
Milinji, sorry for interruption. There is a request for volume.
Oh, okay. Am I audible clearly now?
It's better. But
Okay.
some more if you can, please. Yeah. It's okay.
Yeah. And so, typically if we see, these all has costed the planet, the businesses flourished, but at the cost of all these things. Now we see that general awareness of this impact and look for the need of fixing it. And we find that this is something which is an inevitable journey to take. But it is a very tricky situation. In last 3 centuries or in last 5 decades, the businesses have flourished at the cost of all these things. But today we cannot even imagine fixing all this damage at the cost of business. Business has to move forward. It has to continue to prosper. It has to continue to make money. But still we want to make a positive impact on this environment and society, community at large. That means we are in a tricky situation where we want to take two opposite direction journeys at the same time. Unless and until we don't have a way to balance these two, either it will be a status quo and neither will be able to fix anything, nor will be able to grow at the same pace or the pace at which we expect to grow, or this very concept of sustainability will completely collapse. And this is one thing which we cannot let happen. When we talk of sustainability, what are we talking about? What are we trying to sustain? People will say we are trying to save our planet, we are trying to save our country, we are trying to save our business. But let's see what is the common factor. In the age of dinosaurs, no one imagined of saving the planet. But today we are wanting to save the planet. For what purpose? We are trying to save the planet for the people who live in that particular planet. We are trying to save the country for the people who live in the country. We are trying to save the business for the people who do this business, who depend on that business. And not only this generation, but we want that impact to be there for the future generations too. And so the very factor is the people. ultimately the focus has to be on the people. So here, according to me, the key success factor is that we should be investing a lot in the people. We should be spreading awareness in imbibing the feeling of responsibility towards the initiative that we all are trying to bring in, towards making a positive impact towards sustainability. We all need to take it as a collective responsibility and converge our courage to make the changes happen, not in future, but in our lifetime. And that can happen only if we touch upon the very core, the reason for this adverse impact that has happened all these years. And that is again the minds and thoughts of the people. The critical success factor would be only if we develop an ability to work together and raise the awareness in each and every individual who we connect with, each and every person who works with us. And then only we will be able to shape new narratives and bring in the desired restructuring of doing the business. For now, we all know that wealth is the biggest factor of society stratification. There has to be a cultural change which requires that considering the contribution toward the sustainability, the factors of stratification of organizations and societies have to be defined. While we say all these things, we talk about investing into people, we talk about creating the ecosystem that will help sustainability. We have to also see the other part of it. I am told that nowadays investors are very serious about investing into organizations who have committed towards improvement in ESG factors or alignment to SDG goals. Investors also look at what kind of net zero commitment the organization has. However, these all things are going to cost the business. To do all these things, there will have to be funds which will have to be put into it. But like investors, are the consumers also willing to absorb that kind of a change? Because if there is going to be some funds which are invested into this, it is obviously going to have impact on the services and products. So if the consumers don't absorb it, at the same time, the investors want that this kind of funding be flowed in into sustainability. Obviously, it would pose a different kind of challenge on the business, how to maintain this fine balance. And that is the reason why, whether it be stakeholders, investors, consumers, whoever they are, ultimately they are all people. So if this investment into people is focused on, this concept becomes the part of a human nature, then and then only this concept will sustain very well. If the people decide to do it in spirit and not just because of a compliance or any certain goal driven by commercial, political, or any other agenda, this concept will flourish. This will become a part of social and economic fabric. After that, nothing will have to be done for sustainability. Everyone will do their little bit to make sure that it contributes and converts into making these sustainability efforts a grand success. So that is the only possible as and when it blends into the lifestyle of individuals, you, me, all of us, people who are connected with us, people who are related with us, people who work with us. And then the way of doing business will be very different and sustainability achievement would be effortless. At NSDL e-governance, few of the initiatives that we have taken in last 1 decade, not because of this concept of sustainability, but as a part of our good corporate governance practice and our social responsibility, has built a robust foundation for us to take off. We are moving in a very, very systematic manner, and we are committed to make impact in true sense and at a very respectable pace towards this sustainability. We believe in telling only after doing. Therefore, our commitment towards sustainability will be evident as the time passes. I would like to close my talk here by thanking IOD as well as my organization Energy E-Governance Infrastructure Limited for giving me this opportunity to share my views. And I would like to thank you all for your patient listening. Thank you very much.
Thank you so much. Thank you so much, Milinji. Very kind words and a very deep understanding about how these things that we talk about on sustainability, how do they get implemented down the line within the organizations. Thank you so much. We look forward to your guidance for IOD in future also. Now, I would like to invite our guest of honor and inaugural keynote speaker, Ms. Renu Karnadji. She is the managing director at HDFC Limited. Renu is highly passionate about corporate governance, ESG, and sustainability. Though she has been a one company person since 1978 when she joined HDFC, she is in parallel on the boards of many blue chip companies as non-executive directors, some of them being Glaxo, ABB, Bangalore International Airport, and Unitech. She has been part of the foundation of every other HDFC Group company since her joining. Phenomenal. And also now on their boards, you call it HDFC Bank, HDFC Life, HDFC Ergo, HDFC AMC. She is the most sought after board member within HDFC and within the country with her hands full of boards. An MA in economics from Delhi University, LLB from Bombay. She is a Parvin Fellow, Woodrow Wilson School of Public and International Affairs, Princeton University, USA Fellow. She brings with her rich experience and enormous knowledge of the mortgage sector, having been associated with real estate and mortgage industry in India for over 40 years now. Huge track records. As head of HDFC management team, she has played key role in successful transformation of HDFC into a leading financial services conglomerate. Ms. Karnad has served as the president of International Union for Housing Finance, an association of housing finance firms represents across the globe. She has also served as director of Asian Real Estate Society. Over the years, Ms. Karnad has numerous awards, accolades, prominent among them being the featured in the 25 top non-banking women in finance by US Banker magazine, listed by Wall Street Journal Asia as amongst the top 10 powerful women to watch out for in Asia. She has been the outstanding woman business leader by CNBC TV 18 and also amongst the 25 most influential women professionals in India by India Today. We sincerely appreciate your joining us, ma'am. Kindly oblige us with your.
Thank you, Vikeshji. I think somehow you also told everybody my age. Thank you with all the 40 years that I spent in HDFC. Very sustainable. Thank you so much. I just wanted to say.
It's phenomenal journey. Very
congratulations. Congratulations. For the Institute for, setting up this conference. It's such a timely, topic that we are talking about, sustainability and imperative. I really thank you for inviting me today here too. I think the course of the last 2 years, we have witnessed COVID-19. We've witnessed this as a health crisis, but over time, this has actually evolved into a very multifaceted crisis, which is not only just health, it's environment, it's our lives, it's economic, it's social. So it has jogged us actually into designing a recovery mechanism, not only from COVID-19, but also to work out how we are going to manage the impact of this and focus also not only on the economic piece, but also on the sustainability and the equitable piece of it. The pursuit of economic development and sustainability is not a trade-off, just like Mr. Mungle said earlier. Sustainable economic progress is about finding the balance between a healthy society, a healthy economy, and a healthy planet. This will entail a shift from the long-term narrow thinking, which all of us have had, of accounting and profits, to a long-term vision where it will erase the false trade-offs between sustainability and profit. With this theme in mind, I will focus on three important areas. How can we in India attract foreign flows to promote sustainable finance? As the earlier speaker said, it's easy to be sustainable, but you need the money for it, right? The impact of corporate governance on sustainable value creation. And finally, the new BSRS report of SEBI, which is mandated from next year, a little on that. Of course, I think Mr. Singh after me is going to be the expert, so let's touch upon it. He is the creator and he's written that report. India has remarked, I think we've done very well on its climate trajectory in the past decade compared to where we were earlier. We've not done very well, but compared to where we were earlier. According to the Climate Transparency, India is the only country among the G20 nations that is on track to achieve the targets set under the Paris Agreement. But to maintain this momentum, as I said earlier, we need capital. That brings me to my first agenda, sustainable foreign capital inflows. India's notionally determined contribution estimates that the country will require about US 170 billion per year for climate action. The three quantitative goals in the Indian NDCs are 30 to 35% reduction in the gross domestic product emissions intensity by 2030 from the 2005 levels. 40% share of non-fossil fuel-based electricity by 2030. Creating a carbon sink of 2.5 to 3 billion tons of carbon dioxide through an afforestation program. There are some positive signs. FDI in India has increased by 13% in 2020, and we are fast moving towards a fast growing energy sector. The good news, of course, is there is actually no shortage of capital, either in India or globally. Institutional investors in the OECD and the G20 countries alone have at least US $64 trillion of assets under management. And under the current investment regulations in the OECD and G20 countries, pension funds and insurance companies can allocate up to 11.4 trillion towards infrastructure. Sadly, the lion's share of financing is yet not sustainable, as they say. A new OECD empirical study of the institutional infrastructure investment shows that the investors hold only 314 billion in green infrastructure out of a total of 1.03 trillion in infrastructure assets. So green infrastructure is just 3.4 billion, whereas total infrastructure assets is 1.04 trillion. The decade of action is to support climate and other sustainable development goals, SDGs, has begun, but much remains to be done. Addressing climate change will require a significant increase in green finance and investment. It requires all sorts of finance, whether it's private, public, or blended. What do international investors want? They want long-term capital appreciation. Actually, they're also doing business. They want liquidity so they can get out when they want to. They want de-risking of their investment exposure. And they want the ability to meet their home requirements of the green taxonomy, when they invest in foreign markets. In fact, in short, they want a harmonization of green finances across international borders. In a report produced by FICCI last year, they had a India, UK sustainable financing group. It highlighted areas that we need to work on in order to competitively attract foreign capital towards sustainable finance. We need an all-encompassing sustainable finance policy network similar to the same that they have in EU and other countries. Such a framework will enable a clear, sustainable transition on three pillars: long-term decarbonization and sustainable targets, structured efforts to green India's economy towards climate risk, policy improvements to nudge capital towards sustainable projects. I must commend the foresight of SEBI that immediately after the Paris Accord in 2016, SEBI launched the Green Bond Guidelines in 2017. As of 2021, India has the second largest emerging green bond market after China. The green bond market has witnessed 50% compound annual growth to emerge at a 16.3 billion market in 2020. It is commendable that at least a dozen Indian companies raised money through green or sustainability-linked bonds since the beginning of 21, doubling that amount which we raised, I think, in 2020. Yet, reports suggest that since 2018, green bonds have constituted only a 0.7% of all the bonds that were issued in India. We need to iron out the challenges by generating an awareness around green and sustainable borrowing, offer support measures to overcome hesitation to launch sustainable issuances, increase sector diversification in the green bond market issuances. I'm sure SEBI is already thinking of such measures. Issuers need to understand, they need help in understanding what is green across different asset classes and industry. This would actually make a long way in making them comfortable with industry-specific approach to raising green finance. Here I must add, SEBI is not alone. Even the note by the Reserve Bank of India in January 21 exudes confidence towards India's greener and sustainable long-term economic growth. Concessional lending. Given the onslaught of the pandemic, it has been considerate of RBI to take measures toward addressing liquidity, and we have ample liquidity, and expanding the scope of what constitutes priority sector. RBI can deepen the domestic corporate green bond markets by holding green bonds itself and reducing and requiring commercial banks to do so the same way as they do under the SLR, the statutory liquidity ratio. Under that requirements, if they can be also covered. In order to attract foreign capital flows, it is so crucial to overcome hurdles around the deepening long tenor and accelerate sustainable investments via the ECB route, as well the FPI and the FDI route. A diversified mix of investors and a diversified type of capital will allow sustainable finance ecosystem to flourish. Let us all be very clear. Sustainable finance drives economic growth. This is according to a June publication. It provides a potential to create 18 million jobs by 2030. And I think that's what we need so much in India. And that's including the inevitable job losses due to fossil fuel. For India to capture a growing share of the global sustainable inflows, it will require all of us to lean forward and participate, not by the force of regulation, but by conviction and integrity. This leads me to my second point, corporate governance. The G in the ESG. In the past, investors would be more inclined towards investing in companies with high rates of returns, as we all know. But today they have realized that beyond financial drivers, non-financial parameters play an equally important role in improving their return on capital. Stewardship displayed by the board of directors contributes significantly towards the sustainable outlook of a company, the sector it operates in, and our economy as a whole. It all adds up. I think many of you may know that HDFC published its corporate governance report far before it was mandated. We started publishing it from 2000-2001. Stakeholders, especially investors and ESG rating agencies, look into the key aspects of governance of any organization as the following. What is the business purpose and how well is it aligned to ESG? For example, when at our group, if I can talk for 30 seconds on our group, we are today driven by three really issues, which is diversity, financial inclusion, and inclusion of all types of people across income strata through banking, housing solutions, asset management, life and general insurance products. What do investors otherwise look at? They look at the board composition by skills, by independency, by diversity. These are critical enablers to judge the board's competency as well as gauge its ability to perform. I think we at HDFC, the role between the MD and CEO, we had from 2010, we had separated it. Similarly, if you look at my company where I'm coming from, HDFC Limited, we have 20% of our women of directors are women directors. In HDFC Life, it's even better. 27% there is a women diversity on its board. Then the third thing they look at is material risk oversight. How are boards addressing risk and opportunities from rapidly evolving technology, including cybersecurity, digitalization of their businesses, climate change? I think all these things have become a very, very important part of all the board agendas that we look at it. And I think the proof really lies, in the fact that many of us companies, and I'm sure there are many here who have won the award. And thank you so much, IOD. You actually gave us an award last year, the Golden Peacock Award for 2020. So this brings me really to the last point, which of course I should really leave it to Mr. Singh, but is the point on the BRSR. Global and domestic investors seeking to allocate earmarked green and sustainable monies, they need transparency and they need evidence on sustainable endeavors. There is a big ask today from all investors to address greenwashing, false claims of environmental and social compliance. As a first step in this direction, SEBI successfully implemented the sustainability disclosure requirements by introducing the BRR, the Business Responsibility Report, in 2012. Last year, SEBI established the Stewardship Code for mutual funds and the alternative investment funds. And after industry consultations, to which even we at HDFC responded, announced the new Business Responsibility and Sustainability Report, the BRSR, that will be mandatory for all companies to be filed from 2022-23. Some of us are actually going to do it this year. The updated version will address stakeholders' need for greater transparency in the disclosures of ESG-related information, as it incorporates actually not just words, but quantitative ESG metrics. Indian regulators have been equally ferocious in upgrading existing regulations to make them more ESG aligned. Various amendments around risk committees, timely and mandatory disclosures are aimed at harmonizing certain provisions of the LODR regulations with the Companies Act. Such measures in provisions by a regulator shows how committed they are towards the transition of India's growing economy to being a more responsible, environmentally conscious, socially inclusive, and well-governed engine of prosperity. So Rome was not built in a day, as they say. And we all would agree that the sustainable transition of our economy is not a destination, but a journey. And as we go ahead, it will evolve. But it is a journey that needs capital, which may be scarce and precious. Therefore, we have to be very sure-footed that we don't fritter it away. Thank you so much. Thank you once again.
Thank you very much, Renuji. Thank you very much. You have actually covered all the aspects of ESG so well and laid the path ready for Amarjit Singh ji to take over.
The expert.
And Renuji, we look forward to your continued support, and we would very much like to see your contributions and your support at IOD and many other functions that we do in program. Thank you very much. Now I would like to invite Amarjit ji. Mr. Amarjit Singh is Executive Director at SEBI, and he will deliver his inaugural keynote address as well. SEBI mandates on BRSR has given a first mover advantage to India in corporate governance globally. We are not courtesy SEBI, courtesy Mr. Amarjit Singh ji. My privilege to host guest of honor, Mr. Amarjit Singh ji. He has been part of many vital decisions during his distinguished career at SEBI for last 25 years. Extensive experiences in regulation and security. He is now executive director in charge of corporate finance department dealing with primary market reforms, issuance and listing of securities, corporate governance, corporate restructuring, delisting, etc. He also heads the Department of Economic Policy and Analysis at SEBI. He had his teeth grounded in Northern Region Office of SEBI. Later on, he was heading the front office of chairman, which is the most important position in SEBI, and as his executive assistant, and also the Office of International Affairs. He has been involved in very international regulatory initiatives, and he represents SEBI as part-time member of the Board of National Finance Reporting and the Board of Governors of Indian Institute of Corporate Affairs. During 17-19, he was on the Board of National Institute of Securities Markets, NIMSM, an institute founded by SEBI. He has represented SEBI on numerous committees set up by RBI, Government of India. His recent nomination on such committees include member of Co-Investment Committee set up by RBI in 2019, member of committee set up by Ministry of Corporate Affairs on corporate social responsibility, and also Insolvency Law Committee, an MBA, and also hold master's degree in Economic Policy Management from Columbia University, New York, USA. He is a member of Indian Advisory Board, Newcastle University Business School, UK. He is a recipient of Rotary Foundation Educational Award for promoting leadership development and international understanding by Rotary International, US. Over to you, sir. Amarjit ji, please. We look forward to your words of wisdom.
Thank you for that kind introduction, and good afternoon, everyone. It's indeed a pleasure to be a part of this event, and I sincerely thank the Institute of Directors for inviting me. Let me, begin with the obvious, and I'm sure you've heard it already many times. A lot is happening in the sustainability space today. So climate change, inclusive growth, and transitioning to a sustainable economy, as Ms. Kannad also mentioned, they have emerged as major issues globally. Investors and other stakeholders are seeking greater accountability from corporates on sustainability issues. And I think what has changed in the last 1.5 years, that this movement towards sustainability issues has gathered pace thanks to COVID-19. To be honest with you, I'm still learning on sustainability issues, and I'm not sure how much can I really add value to your knowledge. But I've been asked to speak on BRSR, and I'm comfortable in that space, having worked on developing that framework over the last 1.5 years or so. So what I would like to do in the next 10 minutes or so is to give you a broad overview of the BRSR, including the background, our approach, and thinking while developing this framework. I think importantly, from the audience perspective, I would also like to talk about what are the expectations from the company boards when it comes to disclosures, particularly. And but before I do that, just to set the context, let me talk a little bit about sustainable investing. Although Ms. Kannad again, gave a very comprehensive overview of the trends in sustainable investments. But let me, talk more from the asset management industry point of view. So what we are seeing, globally and also in India, the increased focus on sustainability issues is actually getting reflected. It is not just an empty talk. Actually, it is also getting translated into action. And there is an evidence that we should take note of. So talking about the asset management industry, there is substantial increase in the total assets and inflows in sustainable funds globally. And the COVID-19, as I said, has given a renewed boost to sustainable investing. So just to give you a couple of data points on the global side first. So globally, the total assets in sustainability funds increased from USD 550 billion at the beginning of 2018 to USD 960 billion at the end of 2019 and USD 1.65 trillion at the end of December 2020. And mind you, 20 was a COVID year. Despite that, you see such a massive jump of almost, if you compare the increase from beginning of 2018 to the end of 2020, you see a jump of 200%. So from 550 billion, the figure is 1.6 trillion US dollars. Talking about India, again, we have some very interesting trends on the asset management side. So it's interesting to note that out of the 9, today we have 9 ESG themed funds. Out of these 9, 7 were launched after January 2020. So only during the last slightly more than 1 year. In fact, in the last quarter of 2020, ESG fund assets in India doubled from the previous quarter to USD 1.3 billion. But if you compare, this 1.3 billion with the global assets, we are 0.08% of the global assets in sustainable funds. So we still have a long way to go there. But I think it's not the numbers which are important, it is the trends which are important. So what has been the response? What has been the regulatory response to these trends? Let me talk about that. So there are 2 main driving forces in the ESG world. One, of course, is the investors who are pushing for ESG investing and also seeking greater accountability from companies they invest in. Second is the governments and regulators like us. While as a regulator, we may be agnostic, to where the investors choose to invest. We don't want to guide in any particular area as such, but we have an important role to play in the area of ESG disclosures, and secondly, in the area of mis-selling or greenwashing. Are you actually a ESG fund, or are you true to the label? So that's the issue, and also keeping an eye that the ESG bubble doesn't develop, in the name of ESG. So we are increasingly witnessing greater push on ESG disclosures from regulators world over. We are not only ones, a number of regulators are active in this space now. As Ms. Kannad already mentioned, we had introduced BRR for top 100 companies way back in 2012, and which was progressively extended to top 500 listed companies in 2015 and top 1,000 in 2019. In 2017, we had also introduced voluntary adoption of integrated reporting by top 500 companies. So what is the background to BRSR? Global developments such as Paris Accord, UN Sustainable Development Goals, and the increasing focus on sustainability issues, they have led to a review of the BRR. And so what we did, we had a very intensive stakeholder consultation. We also, just to give you a sense of the process we followed, and this was quite a rigorous process that we followed. We had intensive engagement with all the stakeholders. We also benchmarked ourselves with international standards, some of the known international standards. And after all that, we had come up with this new report called BRSR. And how is it different from BRR? It lays considerable emphasis on quantifiable metrics, which allows easier measurement and comparability. And also, the disclosures on climate and social issues have been significantly enhanced. In fact, one of my colleagues was telling me, who worked as a part of this team, that there are over 700 data points in the BRSR framework. So let me now talk a little bit about our approach while developing this framework. So, we decided we didn't simply want to copy the West. I mean, whatever is there in US, Europe, just pick it up. We very consciously, thought that let's look at our ground realities and then adapt ourselves, our requirements. So in terms of, our ground realities, if I can talk a little bit about that, as we all know, we've been one of the fastest, India has been one of the fastest growing economies in the past few years. However, we have huge challenges in terms of social disparities and income inequalities. So India still ranks 131 among 189 countries in the 2020 Human Development Index. Actually, the position has worsened compared to 2019. We were 129 or 130, so we've actually gone down one notch. Similarly, if you look at the Inclusive Development Index of the World Economic Forum, our ranking is at 62nd place among 74 emerging countries. So this clearly shows that we have a long way to go. So therefore, why I'm mentioning all of this, we very consciously followed a climate plus approach. Climate, of course, there's no dispute while working out the BRSR. So our disclosures are not only limited to environmental related metrics, but also include reporting on quantitative social metrics, such as workforce diversity, health and safety of employees, employee engagement, welfare measures, social impact assessment of projects, the CSR spending in aspirational districts, and who are the beneficiaries of those CSR projects, etc. Climate-related disclosures, again, we've been ambitious there as well. They include data on energy consumption, water withdrawal and consumption, air emissions, scope 1, scope 2, and air pollutant emissions, waste management. So it's a fairly comprehensive framework. And importantly, let me also add, BRSR also seeks a disclosure of financial implications of climate-related risks and opportunities. Another important feature of this framework is that it provides for interoperability of reporting. That is, if the entities which are already reporting as per an internationally acceptable framework, they just need to do a cross-referencing within our BRSR template. Now, I think let me turn to what are the expectations from the company boards. So, as I said, company boards are, under increasing pressure from investors and society to be mindful of the organization's environmental and social aspects. And we are seeing examples of this around the world. Just to give you two examples, one incident in 2019 in Australia, the CEO of a large mining company, he was forced to resign following the destruction of heritage sites. Another example from UK, the share price of a British fashion brand collapsed when the labor conditions in its supply chain came to light in 2020. So these are, I'm just being brief in the interest of time. So these are some very clear-cut examples of why governance matters and how a significant ESG event can actually damage a company's reputation. So again, looking at the legislative side in terms of what are the expectations from the company boards. So my understanding is that the broader, and I'm emphasizing the word broader legislative intent in this space in India has been ahead of the curve. Because way back when the new Companies Act 2013 was introduced, it required a director of a company to act in the best interest of the company, its employees, the community, and for the protection of environment. This is already enshrined in law. The SEBI LODR echoes similar expectations. So what the BRSR does is an attempt to elaborate and make this high-level legislative resolve more explicit. You need a framework. Just a high-level statement doesn't help. So I think the frameworks like BRSR will add to the evolving body of law. So while providing a comprehensive ESG disclosure framework, BRSR also sets out expectations from the company boards. Just to give you some examples, so BRSR seeks disclosures towards ascertaining the role played and oversight of the company boards on ESG related issues. For example, disclosure is sought of the vision and strategy for managing the significant environmental and social impacts of the organization, disclosure of whether sustainability related policies are approved by the board. What is the board level engagement? Are there board committees? If so, what are the details of those board committees which are responsible for decision making on sustainability related issues? What is the frequency of review of performance against sustainability policies by the company boards? So these are just some examples, which are now a part of BRSR. Let me quickly talk about implementation before I conclude. So BRSR shall be applicable to the top 1,000 listed companies by market cap on a mandatory basis from 22-23. However, entities can choose to adopt it on a voluntary basis from this year itself. And it was music to the ears when Ms. Karnad said they are considering adoption this year itself. I'm mindful, that quantification is perhaps easier done than the practice. But I would still like to, emphasize, if more and more listed companies can take up BRSR during this year itself, and not to wait until the next year when it kicks in mandatorily. And I offer two strong reasons. One, to state the obvious, there is increasing evidence, which is, sort of proclaiming from the rooftop that higher standards of ESG disclosures and transparencies help in attracting more capital and investment. Secondly, listed companies have an opportunity to lead the trend and inspire their peer group by staying ahead of the curve, by becoming the trendsetter. So to reiterate and re-emphasize, earlier adoption of BRSR during this year itself has tremendous potential benefits for listed companies and their stakeholders. Let me, conclude with some, some thoughts here that the ideas of ecological responsibility, reverence for all life, equality and inclusivity are not new to the Indian ethos. When we've been told that you have to treat earth as mother, in our tradition. Society's expectations from the company boards on sustainability issues, therefore, do not come as a surprise. It is just that these expectations have been rising and gathering a force in recent times. The demand for sustainable reporting, that is, that valuable information sitting outside the financial statement, is also on the rise. BRSR is a step in this direction. It has raised the game in sustainability disclosures. The ball is now in your court. Thank you.
Thank you very much, sir. Thank you very much, sir. You covered all the points the audience was looking up to. And I think the only point which needed a little more elaboration was about the social exchange. One of our participants had sent a question for you about the status on social exchange. I think we are short of time, so we will seek your answers separately, and we will continue to look forward to your support and guidance. SEBI has been partnering with the industry in that everything that gets done, the white papers are published, industry participates, and then a decision is taken. I think it's fantastic, and it is giving a heads up to India in the global capital markets on corporate governance. Thank you very much, sir. Now we have with us the chief guest, none other than Mr. Shri M.R. Kumarji, Chairman of LIC. I would like to invite him. The person, when everybody in the country is talking about Navratnas, talking about Maharatnas, our Prime Minister, Shri Narendra Modi ji, brings out the Kohinoor of India. LIC is indeed the Kohinoor of India. All eyes on the LIC's mega IPO and the man who is going to make it a grand success, not only for LIC, but also for the nation. CMO has entrusted him to lead this with his extended tenure at LIC. It's my privilege to invite our chief guest, Shri M.R. Kumarji, to deliver the inaugural address for IOD's virtual conference on sustainability and imperative, with a talk on LIC's digital journey. Digital and sustainability, they go hand in hand. Shri Kumar joined LIC in 1983 as a direct recruit officer, has had a distinguished career of over 38 years at LIC with a unique privilege of heading 3 zones of LIC, which is South Zone, North Central, and North Zone, headquartered at Chennai, Kanpur, and Delhi. So LIC is quite deep rooted in him, and he has also gone quite deep into LIC, I must say. His rich experience working pan India from bottom to top in different zones and in different streams of insurance management has given him a deep insight into the demographics and insurance country. He also chairs the boards of domestic and international subsidiaries of LIC of India, mainly LIC Housing Finance Limited, LIC Mutual Funds, AMC, LIC Pension Fund Limited, LIC Credit Card Services, IDBI Bank, as well as the overseas JVs of LIC, that is LIC International, BSC, Bahrain, LIC Lanka, LIC Nepal, and LIC Singapore as well. He is also on the board of Ken India Assurance, a life insurance and non-life insurance company in Kenya. May I have the honor of inviting Shri M.R. Kumarji, Chairman of LIC of India, who has the Kohinoor of India. Sir, please.
Thank you, Mr. Walia. I hope I'm audible.
Very much, sir.
Thank you very much, Mr. Walia. Mr. Shailesh Haribhakti ji, Mr. Ahluwalia, distinguished guests and panelists of the day. Very nice to be in the midst of such distinguished people. I must thank Mr. Shailesh Bhai for inviting me for this. In fact, when he called me up and gave me the subject, I was a little, hesitant because sustainability is not something we talk about every day at the Life Insurance Corporation of India. So I told him, what is it that you want me to do? And he said, why don't you talk about digitization? But then thanks again, Mr. Shailesh. I have learned so much today already, listening to Madam Reno, Mr. Singh of SEBI, and all of you, and given me a lot of insight into what is happening in the sustainability. But of course, I also on the board of ACC, where Mr. Shailesh Bhai is also there, and I listen to him a lot there as well. In fact, Mr. Shailesh talked about 3 things, and that really struck a chord in me. He spoke about conscious consumption, renewables, and land usage. Very true. A lot needs to be done. We know what is happening across the globe. It's nice to hear that as a country, we are not way behind. We are ahead of the curve, like some of the speakers said. But I thought, let me share with you something that LIC has done in digitization over the years. It's a very unique story, which I thought I would share with you, which helps us, as you rightly said, technology and digitization is part and parcel of sustainability. So it's difficult to believe, but then way back in 1960s or 65, to be precise, there were two mainframe systems in the entire Asia, and one of them was the Yogakshama building of LIC. And it's thanks to our seniors and elders who thought about it then. And perhaps even today, we don't realize that what we started doing in the 60s has led us to what we are today. And today we call it sustainability, but we did not know it then. So we did it for entirely different reasons, as typically because in Mumbai, where it all started, where lots of customers, policyholders, and we were growing even in the 60s and 70s. And we thought that we need to computerize our systems. We need to do something to make things better for customers and things like that. So that is how it all started. But then to give you some brief idea of some milestones that LIC crossed in this journey to digitization. In fact, software development started with our EDP department in the 80s. And I, as a young direct recruit, I joined in 1983. I was posted to the EDP department. In fact, I've spent time writing COBOL programs those days. And that is how it all started. We had almost 113 data centers set up for centralized 2048 branches way back in 2010. And I think we worked very hard to make electronic bills, making online payments a reality quite fast and quite early. In fact, there are two things on sustainability that possibly we have done, as I said, without even knowing it. One is that we have ensured that people can, without traveling, without coming to the offices of LIC, make payments of their premiums. We have also ensured that, I think Mr. Shailesh talked about dematerialization. Basically, we started enterprise document management services in 2006. We have images of 1,300 crores, which of all the 29 crore policyholders put together. And let me also share with you that in the first quarter of this year, from April 1st to today, we have had 7.14 crore transactions digitally, collecting 32,000 crores by way of premiums, renewal premiums, etc., etc. Looking at this journey, I believe that we have possibly done a lot of work in terms of sustainability, in terms of carbon footprint, reducing the emissions, and so on and so forth. But then a lot needs to be done. Listening to Madam Renu and Mr. Singh, and listening to all of you gives me a perspective of what maybe we can do in the future. And as LIC also gets listed soon, and what Mr. Walia was saying, that there is a lot of work happening in the background. And I think we will be able to learn and adapt and adopt totally to the new way of doing things. In fact, surprisingly, we had already 12,000 licenses in place for work from home when the pandemic struck us. And it has really helped us to take our operations back office, back home, and doing things, working not only from home, working from anywhere. And that possibly laid the groundwork for us to think about how we can do things differently again in the future as well. I was just looking at some of the things that we've been discussing today. And I also thought to myself that maybe there is a lot more that people who don't realize what is sustainability, people who are unconsciously doing things to help in sustainability. Is there something we can do for them? For example, I was reading a few days back a story, you get all these clippings in your WhatsApp. So there is this Gondia district where there is something called a network tree. I don't know how many of you have read it. You must have come across it. There are about 150 students who climb up on top of a tree every day with their mobile phones and earphones for attending a class. Now, why would they do that? The simple reason is this particular village doesn't have network connectivity, not very strong, but it's very strong on top of the tree. So they all climb up on the tree every day instead of walking 18 kilometers to the next village. Therefore, these boys, young boys, are actually, giving their bit for sustainability without even knowing it. So if we can create that kind of awareness, the fact that what people are doing and that those of who are not doing it as well, and that I think is very important for us in a country like ours where education is still not reached the level where people can just by reading a book understand things. There's a lot of work needs to be done in terms of ESG as well, as all of us have heard. I do not want to speak beyond this because we have heard quite a bit from the experts, and as I said, I'm learning, and LIC as an organization continues to learn, and we will continue to learn in our journey towards the listing as well. I once again thank Mr. Shailesh Bhai for giving me this opportunity, and I'll be reaching out to him to learn more and more on ESG. And thank you, IOD, for this opportunity. Thank you.
Thank you so very much, sir. Thank you very much. We appreciate your time with us. And now I'll request Sri Shailesh Haribhakti ji to kindly thank Mr. Kumar.
Thank you.
Formally.
Yeah.
Formally.
Yeah. Mr. Kumar, you are such a delight to listen to. Not only on the board of ACC, but here. You have created an absolutely new term, unconscious sustainability, deep DNA sustainability. I think that is also what Milind was referring to earlier. And I must say the scintillating conversation that Renuji gave us a full sweep of how we can position for green finance and how we can make sure that we can, as a country, get ready to show the world that we can lead in this new field of sustainability. And Mr. Amarjit Singh from SEBI gave us absolutely stunning clarity on how all of us in corporate India must respond to the BRSR initiative. Well, Kumar Saab, we are deeply grateful to you for having given us such a brilliant takeoff for this seminar. And we look forward to interacting with you, and we look forward to watching you create and polish the Kohinoor of India and bring it to all of us as a capital market, wonderfully capitalized organization. Our best wishes to you in that wonderful new exercise that you are undertaking. And we look forward to your continued support. Thank you very much. And thank you all the people who spoke at this wonderful session. Thank you so much.
Thank you very much, sir, for this inaugural session. We are just about 10 minutes behind our schedule. We'll catch up in the time ahead. So now we have a little video for all our partners, and time to thank them also. We have our principal partners in LIC, in NSDL, e-governance. We also have partners in Birla State. We also have partner to thank in Century Paper and Pulp, and also National Stock Exchange. So thank you so much for all our partners in joining us. And Ravi, would you kindly play the video for LIC?
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Thank you, LIC, and thank you, NSDL. May we have the slide from NSDL? Yes, touching millions of lives through sustainable citizen-centric solutions. That's NSDL e-governance. So we now have the next session coming up on net zero and roadmap for innovation. So for this, we have with us our panel chair, Mr. Santosh Jairamji, partner and head climate KPMG. A conference on climate change, sustainability, CSR is incomplete without Santosh ji's nuggets of experience sharing in this domain. He brings huge stories and experiences to share. Mr. Santosh Jairaman, partner KPMG, leads one of the biggest sustainability consulting teams in Asia for KPMG. He has contributed across 20 countries and multi-sectors in the space of sustainability and climate change. He is an advisory council member of KPMG Impact, which is a global initiative of KPMG to bring together different streams of work with an objective to create higher impact on society. He is also a fellow of Institute of Directors. So very happy for him for accepting our fellowship. Santosh Jairaman specializes in areas of extra financial risk assessment, responsible business, corporate sustainability, product sustainability, sustainability reporting, and climate change. A B Tech from Calicut University. He did his master's in environmental science and engineering from IIT Mumbai. In 2010, he completed a course covering sustainable technologies from University of California, Berkeley campus. He is most sought after for his expertise in developing standards in sustainability space. He has contributed as a member of technical committee for the development of the international stakeholders engagement standards and also as member of GRI G4 working group on application level. Some of his work with his clients are so good that it finds place as case studies for institutes like Harvard and INSEAD. A speaker much in demand, he also contributes regularly to national and international media. He is generous in sharing knowledge and he has been a guest faculty at leading educational institutes. My personal favorite with him is about social exchange, where SEBI has invited him to be submitting a consultative paper. Santoshji's work in social exchange is going to transform the face of business and to bring social for profit into a reality soon. Over to Santoshji for this. He has got his three panelists, which includes Gauri Johar. She is executive director at IHS Markit. She is highly applauded and recognized in energy transition and clean tech consulting IHS Markit, and thus becomes the first choice speaker at sustainability conclaves all over the world. As executive director IHS Markit, she brings 23 years of experience and real life stories in energy transition, clean tech consulting, including energy systems thinking and problem solving with energy stakeholders using the tools of applied economics and finance with wide range of regional experiences in UK, US, Kuala Lumpur, Singapore, Mumbai, New Delhi, and companies like British Petroleum, IHS Markit, National Council for Applied Economic Research with focus on sustainability, finance, multi-sectoral strategies for clean air, corporate benchmarking on ESG energy, and above all, she is also a Masterclass alumni of IOD. So we are so very happy and proud of her. Next, we have with her to give company is Mr. Sanjay Khare, who also happens to be an IOD Masterclass alumni and a certified corporate director from IOD. Mr. Sanjay Khare is a board member and vice president at sustainability at Skoda Auto Volkswagen Private Limited, where he is the chief sustainability catalyst and leads sustainability initiatives at the company in India and also for the brands Audi, Porsche, Lamborghini. Surely it is height of luxury, and you rarely find luxury sitting on the lap of sustainability. Sanjay has a tough task. A BTech from IIT Kanpur, executive MBA from MDI, and he's not only certified corporate director from IOD but also qualified independent director from IICA. Most of his career has been with major Japanese and European automotive OEMs in Indian subcontinent for over 35 years across diversified functions like manufacturing, HR, quality, safety, and sustainability. He leads an active climate resilience program where the automotive major in India is already achieving zero waste to landfill, water positive, zero liquid discharge certification, zero accidents, targeting an 18.5 megawatt of installed rooftop solar plant at a single automotive site in 2021. And it is going to be fully carbon neutral production by 2025. Huge achievement. He takes active interest in cultural changes, competency building, HR motivation topics. He is a very sought after speaker and on automotive and sustainability topics on national and international forums. In his personal life, he is an endurance cyclist, having participated in many multi-century adventure club ride expeditions. And when he is at leisure, he plays the classical music instrument called sitar. He has mastered it. I wish we had some time and he would have brought his sitar for us to listen to some sitar from him. Third speaker and panelist is Anirban Chatterjee, business head of supply chain practice at DNB. Anirban Chatterjee is digital innovation, sustainable finance, management consulting, and risk management professional with about a dozen years of diverse experience into TIC industry, financial services. He's a technology enthusiast, certified specialist on blockchain, AI, ML, and qualified assessor in sustainable finance, climate risk, ESG, QHSE, sustainable water management. He has led India's first GRI G4 report assurance for a cement producer in 2014, as early as that, and was a certified GRI trainer and assessor also. He also has expertise in climate finance, CSR monitoring and governance, SRI, and management systems and audit. You name a thing in this domain, and he has contributed in more than one way. He's looking after the territory of not only India but also Middle East for DNV. And so Santosh has a very, very good panel with him, and I would request him to chair and share the storytelling, sharing, and discussion, and take some Q&As as well. Please, Santosh ji, kindly. All yours.
Thank you. Thank you. And thank you for that very, very elaborate kind of introduction. And it's always a pleasure to be in the forum of IOD. And
why are you hiding about social exchange role that you are playing?
No. I think Sebi Amarjit Singh was there already. I mean, he was the chair of the committee. Yeah. So I played only a small role of one of the members of the committee. So I think, I think he should be the person who should be speaking. But anyway, net zero and climate change, I think, isn't this the holy grail inside the ESG, right? When we talk about the whole of ESG sustainability, I think the one of the most important kind of topic in today is climate change. And maybe before I go to the panelists, maybe I can give a bit of a context. And let me start from a dialogue or a conversation which I read from one of the novels written in 1926. This is a novel by the name The Sun Also Rises by none other than Ernest Hemingway. So the character there, Mike Campbell, is asked about his money troubles, and he responds in a manner that is a bit of a self-contradiction. So the dialogue goes like this. The character Bill is asking to Mike, saying, how did you go bankrupt? The question is, how did you go bankrupt? And Mike says, two ways, gradually and then suddenly. Now, when it comes to climate change, I think this is the best conversation which I can quote. And today, this, it was gradual, but I think it has really picked up pace, and we are already seeing the risk starting to precipitate. So we already have the first bankruptcy due to climate change. It has already happened. We are seeing drastic strategy shifts in various industry segments. And I'm quite sure many of you would be hearing oil to chemical. Now that sounds quite familiar now. Almost everybody is speaking about oil to chemical shift, coal to solar, and then fossil fuel to electric. So I think it's kind of big shift which is happening in this dimension. So I think thanks to IOD, you have put together a kind of a very good panel to discuss this new buzzword of net zero. And Gauri, who works in the space of energy transition and clean tech, will definitely touch upon the role, the manner in which energy is playing a big role on net zero. Sanjay ji would cover the Volkswagen's plans as to how they are going to achieve towards the zero. And Anirban would educate us on some of the key standards that the organization can follow in the journey towards the net zero. But as a context setting, let me explain why net zero and what is this net zero. Okay. So the science tells us that man-made carbon dioxide emissions need to fall by about 45% by 2030 compared to 2010 levels and reach net zero by mid-century, which is 2050, to give the world a good chance of limiting our warming to 1.5 degree. Now, the question people can ask is why 1.5 degree? Because it was under the Paris Agreement that nearly 200 countries said that they would limit the rise in global temperature to well below 2 degrees centigrade and strive to keep it to a ceiling of 1.5 degrees. So that's where the limit comes in.
My host of the event.
Sorry. Yeah. So by 2050, we should be balancing the GHG emissions which we produce, and it should be balanced with the. Can I ask the organizers to mute the others? Okay. Thanks. There should be this balance between the emissions produced and the emissions removed from atmosphere. This is what we call as the net zero. I just completed reading a fiction book, which is called The Ministry for the Future, written by Kim Stanley Robinson. The book's plot starts with, it's set in the future, and it starts in UP, and UP being hit by a big heat wave. That's how the whole book starts. And the plot runs through the impact of climate change, the difficulties a particular body set by the UN has with implementing the Paris Agreement, and how it also goes through a lot of climate-induced violences and all those kind of things. So I think it's kind of a little terrifying future, which we look into when we see from a climate change perspective. The pandemic showed us how a global level impact would look like. And that was also the tipping point for people to realize the importance of climate change, because COVID at least have a hope in terms of vaccines, but climate change definitely doesn't have vaccines as well. And I think that's one of the reasons why we see a big push in terms of capital allocation or big capital allocation towards climate change. And I think some of the earlier speakers did mention, and the EU Sustainable Finance Taxonomy is clearly looking into climate change in a big manner. So why is it important to India Inc.? I think we have crossed about 30 Indian companies who have committed to net zero. We have a couple who have already reached that level. of neutrality. So what exactly is the driver for these companies? One definitely is, the finance part of it, the market valuations, the investment risk, cost of capital, all these things would be the top. But the second driver, I would say, is the future fit organization. Because in terms of, there is only one journey, like one northward journey, which is a low carbon future. Now, in going into the low carbon future, how future fit you are as an organization in terms of your own processes, your own products, and all those things. And I think the other one is the customers' net zero commitments, because we are in the value chain of many of the global customers. And then last but not the least is also the huge business opportunity arising from the this particular journey towards net zero. And since LIC was there, in the call, I was just saying is that, for example, climate change could put the insurance out of reach for many people, because the kind of impact which is going to cause, it's already being talked about as to how the rates would go up. So this transition, which is characterized by net zero, is beginning to reverberate both upstream and downstream of the business. And does people have a kind of a clear pathway to reach this net zero? I would say, every bit of the nuts and bolts will not be very clear as of now. But broadly, if you look at it, 3 dimensions: reduce emission from operation, adopt clean energy sources, and offset the remaining emission. I think that's broadly the pathway to the net zero is going to be. Reducing emission is mostly efficiency improvement, right? I mean, you improve your process efficiency or optimize your logistics, you are reducing emissions. Cleaner energy is today cheaper, but there will still be emissions which will be required to be offset. So all these 3 components would be very clear. So I think I will stop there, since we have a great panel, and I will kind of now request Gauri. Energy is the key component towards the net zero. So maybe Gauri, over to you and I will request all my panelists to stick to their timeline of about 6 to 7 minutes. Over to you, Gauri.
Thank you so much, Santosh, and thank you so much, Vikeshji, to have me here, to invite me to this panel. Really delighted and honored to really be here with amongst this galaxy of experts, and it was fantastic to listen to the scene setting that was done by the inaugural session. All the experts of industry, of the financial industry, and Mr. Shailesh Haribhakti also. So thank you so much. It's a real honor, and I will keep some few slides as a background. I'll refer to them a little later, but I will just keep them up, and just so that it's always nice to have something to take away, is what I really believe in. So just give me 1 minute if I can just put that up. Okay. It's just loading up. You know how I shift these slides? I'm sorry, I'm new to this. Okay, let me just go to the next one.
And with the help of down arrow, you can shift.
There we go. Yeah. Okay, great. So, when I thought about sustainability, I think what came to mind was to be or not to be. That is the question, and I think we've explored this question in so many ways, but sustainability is all about that. It's about the planetary to be or not to be. And I really like Santosh's reference to, Ernest Hemingway, that it first happens gradually, then suddenly. And I think that's what we are really trying to avoid here. So without any further ado, in the language of design and systems design, we are confronted really with a wicked problem of sustainability with a capital S. In the 1970s, there were 2 design theorists, Rittel and Weber, who characterized problems such as sustainability as wicked because they're difficult to solve, they have trying timelines, and they have a challenge of coordinated action. And what's interesting is that the problem solvers and the problem creators are often on the same side of the equation, energy companies in this case. And the tendency to prioritize exists, that we prioritize the present over the future, which is also called hyperbolic discounting. Hence, the path out of addressing the effects of climate change, as has been laid out by my former speakers and experts, appears to be non-linear, uncertain, and material. And energy and economic choices may very well collide with climate constraints. Since the late 1980s, with the setting up of the Intergovernmental Panel on Climate Change, the IPCC, and then the Kyoto Protocol of the early 90s, sustainability has been coming into a sharper focus. The very existence of our species, to be or not to be, in the evergreen words of the great bard, have acquired dimensions of greater breadth and greater depth. In the mid-2000s, as the impact of the US shale gas revolution was gaining strength in the energy world, and it took a lot of energy experts also by surprise, the focus on sustainability was also growing sharper. Just about then, there were three things on a personal note that left a mark on me as an energy professional, as I was making a shift from an energy career largely focused on North America to Southeast Asia. It was in those mid-2000s also when BP launched the carbon footprint calculator for the very first time. The book Al Gore's Inconvenient Truth was launched for the very first time. And I happened to meet a young climate specialist in Germany, and that really began to make me think about sustainability beyond the sustainability of an energy company's financial strategy in the midst of booms and busts of commodity and economic cycles. The latter was really where the bulk of my training and experience resided, so sustainability in some senses was new. I now knew that there was something more that had to be factored in. The word sustainability had acquired a meaning much greater than jargon, and one that needed the swift attention of companies and countries. Roll forward, climate change with each passing decade has gained the attention of a wider spectrum of stakeholders in a bid to prevent a market failure in addressing its challenge to sustainability. As Santosh also mentioned, the Paris Climate Agreement of 2015 was a watershed event, which has increased the pressure for climate-related financial risk disclosures, I think some of which were also referred to in Mrs. Karnad's speech and Mr. Amarjit Singh's speech. Post-Paris, the Task Force on Climate Disclosures established by the Financial Stability Board has 31 members from across the G20 and has been adopted by more than 1,500 organizations with a total market cap of $12.6 trillion and financial institutions responsible for assets of $150 trillion. Firmly rooted in the complexities of this interrelated energy and economic system, sustainability last year, the year of 2020 COVID, reached the boiling point of net zero ambitions by countries and companies. More than 100 countries, accounting for over 70% of global greenhouse gas emissions, have now announced net zero targets. Energy companies are increasingly announcing a range of net zero targets on the nature of emission reductions they are going to focus on. So those nature of reductions are sometimes scope 1, scope 2, scope 3 emissions, depending on whether it is direct or indirect energy use that impacts those emissions. And they're under increasing pressure from investors to demonstrate that 1.5 commitment to the path of reduction in emissions. In the quest of for this planetary balance central to net zero ambitions, India and India Inc. are no exceptions, though we face the classic dilemma of development and its associated carbon footprint that are foundational to our energy mix and choices. In this, India Inc. has, as shown by the 2035 net zero ambition of Reliance Industries and about 29 other companies, and energy compacts of even companies like NTPC, Toyota Kirloskar, JK Cement, Ultratech are noteworthy. While India Inc. can accelerate on this net zero path by the right portfolio choices of as Santosh laid it out very well about clean energy choices, offsets, and reduction in emissions, India as a country will likely have to show a more considered path to adopt net zero or a variation of net zero that really incorporates this balance of climate ambition and climate justice. as this dichotomy of the path to net zero and the Indian economy play out, I would like to share about 5 points for the consideration for the boardroom and the policymaker alike. And this is where I will go to the next slide, wherein in IHS Markit, we view the world in different scenarios, different worldviews. So if we take a very base case path to net zero for India, what we see still remains largely reliant on fossil fuels to meet its energy needs. Right now, India is about 76% reliant on fossil fuels. That'll come down to 68%, but still way above 50%. The share of renewables, of course, will increase by the end of 2050, but still stay below 15%. However, if we really commit to it very strongly, to that 1.5 aligned path, which is much more ambitious and aggressive, in the green rules scenario, what we call it the green rules scenario, the share of fossil fuels can decline to as much as 37% by 2050. But that'll require a lot of commitment, a lot of coordinated action on the part of companies. Sorry?
Okay. Sorry, have you moved your slides? Yeah,
yeah, I just moved it. So that'll require a much larger committed action on the part of India and India Inc. acting in sync. In terms of the other aspects to this, these sort of 5 points, the road to planetary net zero. So if the world has to achieve net zero targets, that road to planetary net zero goes through India and China. For the global energy system to achieve net zero by the mid-century, India and China are key due to the size of the population, high economic growth rates, and associated development goals. In the period through 2050, from now to 2050, China's share of key industrial sectors in global industrial production that account for emissions growth will go from 39% to 51%, and India's will fall short of to about 10% from about 4% right now. Under the most likely base case view of India, we see emissions will grow on average 2% a year from now until 2050. So how to fix that? I really believe that the equations for carbon price, cost of growth, and value of clean air will need to be aligned. For the Indian economy, this will require putting a value on clean air by enacting a sufficient carbon price mechanism that can alter fuel choices and remove the high carbon lock-in of this Indian energy mix. There was a coal cess mechanism, there has been a coal cess mechanism, which is, well, you can call it a de facto carbon price. It has not been sufficient to alter the use of coal and incentivize cleaner fuels. For India Inc.'s boardroom, this will imply carbon pricing entering project stage gates of approval and decision-making. We have seen automotive companies like the Mahindras announce that very explicitly. And this needs to be as important and visible as the interest rate for debt or the oil price for energy consumption assumptions in planning assumptions for company boards. Technologically, the fifth point, India has a huge opportunity right now to leapfrog in the next generation of material high impact low carbon technologies like hydrogen and carbon capture, utilization, and storage. As a world leader in refining and petrochemical capacity, India Inc. can actually accelerate the hydrogen economy across the value chain. In carbon capture, we have case studies of innovation by companies with local engineering talent, such as Carbon Clean, that are deploying technology both globally and in India. India's talent advantage of world-class engineers can meet the needs for accelerating and innovating on low-carbon technologies. India also happens to be the largest global location of global carbon offsets, which creates a huge, I would almost call it a bargaining chip in this climate negotiation space. Ultimately, this is where I'll come to my last slide here, it is not going to be easy, and it requires a systems thinking approach at the global level. What you're seeing here are signs of, a recognition at the consumer level. I think in the opening, Mr. Hari Bhakti very clearly said that consumers will have to change. And I think consumers, that reality has caught up with consumers, because consumers also are the job seekers, and they realize that there are no jobs on a dead planet at its worst. So ultimately, my closing point would be that an energy systems approach would have to be adopted by the Indian economy, where several global, national, subnational points of influence and leverage of carbon pricing, energy choices, economic choices, cost of capital will really run like a large non-linear programming problem, where the clear and present impacts of climate change and local air quality will manifest in more ways than one. Peter Singhi, key proponent of systems thinking and also the author of the book, The Fifth Discipline, shares that the world is made up of circles and we think in straight lines. We need to adopt that circular, systemic approach to sustainability, both in the boardroom and in policy making. Thank you.
Thank you, Gauri. And I think, yeah, a good thinking topic to the boards at the end, and thank you for that. Sanjay, maybe I would ask you to kind of brief in terms of how, as an company, you are planning towards your journey towards the net zero while you are preparing, to put out your slides. Let me also share that about a decade back, one of the automotive organizations in the country, we did a kind of a work, and the first year we kind of measured their carbon footprint. The very next year they were 20% down. When I asked them, they said, yeah, we outsourced some operations. So definitely would like to hear more from Volkswagen.
We thank this entire panel over here for the wonderful insights we are bringing in. Thank you, Vikeshji, for the really, blessed introduction that you gave to me, an alumni of IOD. And thank you, Shailesh Haribhakti ji, for chairing this conference and bringing all the beautiful insights. So, Shailesh Haribhakti sahab, you said that we should start using electric vehicles. The very first thing is that we are going to launch the Audi e-tron in this current month. It's a wonderful luxury vehicle in the pure electric segment. We are also launching Porsche Taycan, which is already there. These are two things. That's the way we are coming to India through the luxury vehicle segment. In Europe, our EVs are becoming very, very popular. The sale of Volkswagen Group vehicles is more than twice the Tesla vehicles right now. Yes, future is going to be electric and future is going to be bi-directional. We'll talk about bi-directional in the times. We are in India taking care of these 5 brands: Skoda, Volkswagen, Audi, Lamborghini, and Porsche. And what you see in front has come as a group a materiality analysis. The decarbonization was a top focus area. Decarbonization, circular economy, resources, responsibility in supply chain business are the 4 focus areas which are a part of the entire sustainability focus areas, and that's how we are moving right now. And we have seen that transport has 14% of emissions of the entire global emissions, and Volkswagen as a group has got a 1% share. We have a responsibility towards that. So what are we doing for that? So we have to become a CO2 neutral society. That is what the Paris Climate Agreement all about. But we are driving CO2 neutral mobility, and to all of us 600,000 employees worldwide, we are working on individual CO2 neutral footprint. It's a very, very focused campaign that's been going on with all of our employees also. So, so here you can see what we have done is to align. Are you able to see my screens or not? Changing screens?
No, I'm not. The slide doesn't.
Slide change is not happening. Yeah.
Oh, sorry. So there is some issue. There are wonderful slides over here, but why the technology is not really.
So I would request if you can please change the slides with the laptop or desktop arrow.
Now
it's changing. Yes, it's not changed.
Sorry. So I have just pushed forward decarbonization of the main focus area I talked about. I talked about these 4 focus areas. I talked about 1% as a major, major of our emissions that we are there out of the 14% transport emissions. We are talking about CO2 neutral mobility. How do we do it? By 2050, we have to be carbon neutral. We have announced a very clear program of aligning to CO2 as science-based targets to, by 2030 in the reduction plan. And by 2050, we have to become carbon neutral. This is a very clear plan, and this has been announced by Dr. D, our global chairman. And we have a very, very ambitious Go to Zero program focused on 4 areas: climate change, resources, air quality, and environmental compliance. Climate change is all about implementing total neutrality and bring down the overall life cycle emissions, greenhouse gas emissions. Resources about the 5 factors of CO2, energy, waste, VOC, and water. And environmental compliance is into each and every aspect of the compliance systems with a lot of integrity that we are trying to drive. Not driving, it has been driven now very well across all the brands. And now this is the main slide, and this is where, Santosh, you can see on the side what you have precisely said, that effective and sustainability CO2 avoidance. Second is about switch to renewable energy, and third is about the compensation. Precisely, you have talked about our global strategy already. I think you are a soothsayer. But we have got the 5 areas of our entire value chain, that is from resource extraction to supply chain to in-house production that we do. Then comes the use phase, that is the fuel supply and tailpipe emissions, and then the end of life. Now, for all these 5 stages, we started it focusing in India on the that is the production phase and the supply chain right now. From Europe, we are working in a very, very focused way on the fuel supply and tailpipe emissions. We'll talk more in the next slides. In India, we have got these 6 specific areas we are working upon: decarbonization, zero waste, circular economy, water conservation, social responsibility, biodiversity, and compliance. So we have set up already India's largest solar rooftop, which is saving us 9,000 tons or 9,020 tons of CO2 every year. This is already 8.5 megawatts. I'm adding another 10 megawatts this year. Now, biggest thing is that what was said, that climate change has already come to a tipping point. Yes, this cost is so cheap by installing this plant, which has been done totally on an OPEX basis. We have not invested the money. What power I was buying for 8 rupees 20 paisa a unit, now I'm getting it for 3 rupees 20 paisa a unit. All simply because I have just given out my rooftops for putting the solar plants, which were otherwise idle. So this is the sustainability means good business. This is what I'm driving in my organization also, that sustainability is also good for economics. And that's what has been very, very well accepted. You can see all my board members from Czech Republic here for the inauguration of the first green car made by the green energy. And we have got a very aggressive plan. By next year, we'll be putting up a biogas plant, also 7.5 tons by the local food waste. And we have got a very clear roadmap to become totally carbon neutral in production by 2025. We mean it. We already have become a zero waste to landfill plants, both the plants. Pune plant is just less than 1% left for the final landfill closure, and rest everything has been, well, we have got very strong production unit with paint shops and all, but wonderfully we have been able to do the circular economy based system. A lot of our wastes are going for circular economy things. So for generating carbon black or generating primers and thinners from the waste. So a lot of things are happening. There are people, I mean, we have a very strong system of internal communication on a monthly basis, and so much motivation is there in the entire team. They come with wonderful ideas to implement circular economy and things like this. We have also become water positive. So whatever amount of water we use inside our plant, more than 3 times of that we sequester outside. So and we are also zero liquid discharge plant already. Already for the last 2 years, we are certified zero liquid discharge plant. So this is towards our social responsibility. And all this, whatever positives we are doing, has left a very, very positive impact on the biodiversity. These are the photographs of our own campus. There's our own internal eco park or a biodiversity park we have. And in the last census 2015 we did from the Pune University, we had the 240 species. And the one that we have done this year, we've got 320 species, including the very, very wild eagle, owl, and number of butterflies. Even the Indian fox is there inside our campus. And all with, we have been launching wonderful cars. We have taken out Kushak SUV and Taigun SUV, wonderful €1 billion we have invested into in India, and still we are doing such a responsible way that the biodiversity is thriving. And we took out a coffee table book on this topic on World Environment Day, where it was very, very highly appreciated in the groups. I can share with you a copy of all this. We have already invested on around 450,000 mangrove plantations. This is towards our what you call carbon neutralization program that we are doing it. Though it's a part of CSR, we are not claiming it as a neutralization, but we are investing heavily into mangrove forestation with the Maharashtra government on the Konkan coast. We are also now working, knowing very well that India, we do have India and South Africa. These are 2 areas in the group which we feel has got very strong solar potential. And in India, we are working with our suppliers on a pilot basis to really motivate them. And there will be 10 of them will be from the German or Czech European origin, and 10 will be from India. We'll work with them hand in hand, really bring them out and make them on a level on which they can come at par to what we are operating on. This will also meet many Sustainable Development Goals. Same thing, we are now going to our dealerships, all the 5 brands, all the dealerships. We know that customer is a touch point, and that's where we can speak best about our sustainability initiatives, what we are driving. And circular economy and life cycle engineering. Here you can see Audi Q5, we did the life cycle engineering. We reduced the weight by 50 kgs and emissions by 6%. The entire life cycle emissions of the car, as well as about the fuel efficiency also was improved. So all these thought processes are very much there into the company, into the entire process. And this is one of the final slides. In European Union, we on this 20th of April, we installed this Way to Zero program. Here you can see that what I talked about, this is the first top line, but in the middle, you can see that the wonderful thing they are talking about future is bi-directional. They are going to make all the electric vehicles as a mobile storage device. So, and each and every home, each and every office is going to be there with solar or wind or such renewable grid connection with obviously with mobile app. And it's not, I'm talking of a long-term future. The future is real over here right now. Ellie is a company who's working along with us. Then the entire green network of the renewable power over there. These cars are connected. So whenever you are not using the car, which is car is unused 95% time, it's getting charged. It's there on the grid. Time it needs power, it charges itself. Otherwise, it feeds back the power back to the grid. Last thing they are talking about is the future of urban mobility. Instead of talking the mobility topic is all about how do we really think about cities? I mean, how do we make a network like what we have in places like Amsterdam? A very good network of road, rails, and water transport, as well as metros. So that it's more talking of approachability versus mobility. It has to be really connected together. So in the end, we have to really minimize the environmental burden by zero CO2 emission plants, and then holistic decarbonization program derived from the Paris Climate Agreement, consistent switch to renewable energy across the value chain, compliance, integrity, and governance and management conduct, very, very important for us, and leaving positive impact on the water, local environment, water, land diversity, and society at large, aligning to UN Sustainable Development Goals. So I have talked about basic brass tacks over here, and there's nothing that I've talked about which is any theory, but yes, this is what we have been practicing, and really we are working with heart on the topic. So thank you so much. I think I would have take care of the time part too.
No, thank you, Sanjay. I think many times when we talk a lot of theory, I think it is good to kind of showcase what can be achieved by an organization, and you very clearly brought it out. And I think the topic also is something as we go along. There need to be universal comparabilities. There need to be a kind of a standards what need to be followed and all those things. So Anirban, I think we are already delayed by almost about 20 minutes right now. I think would ask you also to be brief and to please go ahead. Yeah.
Sure. Thank you, Honorable Shailesh Haribhakti. Thank you, Mr. Vikesh Arya also for inviting to share our perspective. At the same time, it's been an absolute great learning for last 1.5 hours to listen to all the industry followers, and this panel is extremely touching upon the facts of action where all we need to do. So I would touch upon one very important aspect of the net zero ambitions of India Inc. Which what the organizations need to follow in terms of the standardization, the assurance approach, or from a practical point of view, how they can actually ingrain or integrate decarbonization or net zero ambition into their management system DNA. So I have only a couple of slides and I want to just share. So on the industry's vision, we are hearing aligning with the national vision and road to net zero. Of course, Indian government is yet to come out with a strong climate change kind of a bill, which is expected in some time. But it is imperative that the approach should be aligned and consistent for all the heavy emitters. So what we think that probably a three-pronged approach to strengthen the decarbonization vision, because many of the corporates or intergovernment panel or even the states or the local municipalities, they are also looking at contributing towards the net zero. So what should be the consistent platform or an approach organization should take to meet India's NDC? Of course, that is the first imperative for all of us to achieve the 2030 goal, and then to reduce our overall emission of 33 to 35%. from 2005 level. And in a process, the heavy emitter, the process industries, the energy and the steels have to contribute more. In this aspect, I think that the three-pronged approach which I'm talking about, the connection, the capability, and the credibility, will play an important role in and will be a in the journey or the pathway, good support for all the corporates. So we see that a lot of corporates are seeing taking a lot of corporate level strategy or the group level strategy. Sometimes it is aligned with their global vision. But when it comes to the granular implementation at the business unit level or the site level, it sometimes lag, and that delays the entire achievement timeline. So the connectivity with respect to the global vision or corporate level strategy, that has to match with the implementation action or the timeline. So that is what the connection plays an important role. And as we are all learning and the evolving segment of capacity building, it is very important that all the corporates also identify various decarbonization champions and try to. There are various ideas which Mr. Khare also talked about. Those are the internal benchmarking tools need to be developed in order to ensure that the overall capacity for the organization is aligned with the goal of the organization for the net zero. And this awareness creation internally through externally, and these all would add to the overall climate resilience for the corporates in the short term, medium term, and long term. And of course, the credibility is very important. We do not want net zero targets or commitment to be, or many corporates might take it as a greenwash or consumer-driven world. It should not happen. In the product stewardship also, the robust measurement, monitoring framework, and the scenario planning with various standards and guidelines are very important. So there comes the importance of setup of very important the internal assurance practices and also supported by external assurance. So that the baseline, from the baseline, the reduction, then the offset, and then meeting whatever is the remaining part of the carbon reduction, everyone can achieve together in an aligned manner, in a sustained manner. So I have 6 steps to share across to the audience and to the panelists for your views, that we all have seen and come across to the standards for last 20-25 years in the birth of ISOs. And we have seen that many a times organizations, processes and procedures are very much aligned with this plan, do, check and act, and the basic quality management principles. But I am pitching here and focusing that let us all try to adopt a similar approach to make sure that the net zero strategy is also ingrained into the management system DNA, and we can look forward to adopt some of the global standards and frameworks. So at the beginning, as Gauri has also talked about, that the baseline and what is the vision, what is the timeline, how the organizations should look for, what are the key pillars of the net zero strategy that need to be brought in. And then of course there are global best practices of the sectoral best practices which can be looked at from a baseline defining point of view. The organization may choose a national baseline, or the organization may choose their own baseline, but the greenhouse gas inventory, that should be a kind of a basic standards and methodologies which helps to benchmark that what should be my short term, medium term, and long term goal. And there are ISO 14064 series of standards, the WRI GHG protocol, which has helped all of us. But now probably we need to look at the entire net zero in an integrated vision, so that not only we limit ourselves into the annual disclosure of our emission, but also align it with what is our achievement with respect to the emission mitigation and adaptation strategies. So engage in this point. The third step, which is the engagement with the key stakeholders, plays an important role, not only within the organization and the global peer, but also the external stakeholders like government, regulators, and also investors in a large way. So development of this implementation and communication engagement plan will certainly play an important role, that how much you require to calibrate yourself. This is your own sectoral aspect of net zero, and whether it is really adding value to the national net zero target. That is, we have to see, and we need to keep on calibrating. And I feel that the net zero going forward for all corporates should be very much dynamic. But the targets, many a times due to the current situation, global pandemic, the initiatives are also not being aligned, and you are not able to achieve what the way at the pace you want. So that's why this alignment of the overall stakeholder vision also is important. And we have all seen, we have heard the SEBI chairman also talked about the BRSR. I think that is going to be an excellent tool for corporates to going forward to align with overall global benchmarking as well as stakeholder engagement as a view. Then it's very important that we think of the scenarios. Gauri has really touched upon how the scenario planning should be done. But we have seen currently, except few sectors, the scenario planning and activities have not started because probably we do not have enough or adequate tool, sector specific, or we do not know that how the guideline will impact our own business strategy. So the TCFD guidelines we have seen, many of the corporates in India have also started adopting the TCFD guideline for disclosures. But then it is very much important to set up the climate governance at the very beginning, at the top level of the board. So that we are seeing some of the corporates are coming out with ESG committees of the board. They are redefining the sustainability and strengthening the existing CSR committees. So I think this will be the new norm going forward, and there has to be mandate from the board to see how the business is going to perform in different climate scenarios. And I think some of the global standards will certainly play an important role. Coming to reduction option, we have seen the energy transition as a very important activity, but then there is a host of or the library of decarbonization option which organization can take. But in terms of standard, there are two emerging standards. I would like to draw attention to all the audience out there that there is an ISO 14080 standard, which has not adopted globally as of now very well, but ISO has come out with a very good standard to make it integrated with the management system. It's called Climate Action for Mitigation and Adaptation. So whatever reduction initiative you are taking, whether it is actually going to sustain or it is one-off an action, so that will define through ISO 14080. And then there is a new standard which has come for ISO 14097, which is actually greenhouse gas management and how the financing activities actually would play an important role in terms of bridging the net zero gap in terms of clean technology, in terms of reduction, technology transfer, as well as carbon capture storage and large scale sink development. So 14097 is very important standards. I think these two standards will take over slowly in years to come, and I would encourage all the audience also to look at these standards, identify what are the opportunities for you. And then we have many of our corporate partners here in India as well as globally. We have seen carbon neutral organizations, how they are doing it, and past 2060 is a very important standard, which not only talking about your baseline, but also talking about your overall gap assessment and neutrality strategy and offset and carbon credit as well. So the portfolio of the overall offset project and how the investment and implementation plan goes hand in hand, that will also play an important role, and with measurement and analytics. So what I'm going to request and ask view from all the panelists also here, that how we from the step 1 to step 3 we can align and try to see an integrated action for corporates to achieve the net zero strategy, and we can make the overall climate governance more robust, more action oriented, and more measurement oriented and assurance oriented. I think that is the way the world is moving. The disclosures are also becoming more performance oriented, and we are certainly going to see from next financial year when the BRSR disclosure, the renewed disclosures will come from top 1,000 corporates.
I have done that.
I would request, I'm done with my session.
Thank you.
Thank you,
Anirban.
So I would request Santoshji to...
If you can take down the slides, if you can take down the slides.
Yeah, I will.
Thank you. So I think, Vikeshji, I think over back to you, because we have a bit of challenge in terms of the time. So I would suggest that we take the questions towards the end. So as a concluding remark, I would just say that, India as a country, we have a high risk, not just from a physical risk perspective, but also from a transitional perspective, because many of the new technologies, new things which are identified as of now, in terms of the technological know-how and many of those kind of things, it's kind of a level playing field. Nobody has kind of mastered any of these things, but I think it's kind of very important for us to realize that that transition is also a risk. The physical risks are high as a country as well. So I think this should be factored into many of the discussions as the companies are planning in terms of their risk management and the way forward business plans and all those things. So I think we would stop this panel here. We move to the next session. Vikesh, over to you.
Thank you so much, Santoshji. I sincerely appreciate your on the timing and better time management. Audible?
Yes,
Ravi?
yes.
Yes, sir, you are.
Okay, good. Ravi, please add Thara TK to host. I think she has exited or she has been denied entry there. So Thara, if you are listening, please rejoin, re-log in. Otherwise, Ravi, please speak to Thara and invite her to re-log in.
Fine, sir.
Thank you so much. Thank you so much. So I think now we move to the next next topic and next session, which is BRSR, time to reimagine our annual reporting. And for this, we have got with us a very, very good panel comprising of our chairperson for the panel, which is none other than Mr. Narayan Jayaprakash. He is the Chief Executive Officer of Century Pulp and Paper, and also a Masterclass alumni. Paper and pulp business has always led to discussions on environment and sustainability. Our chair of session on BRSR, Mr. Narayan Jayaprakash, is Chief Executive Officer of Century Pulp and Paper, a division of Century Textiles and Industries Limited. He has an excellent academic record and very enriched work experience, including managing various P&L of the businesses, and he has in the past worked with FMCG businesses as well. And Mr. Narayan has received accreditations at national and international levels. He has been awarded. He's highly passionate about CSR work and gives personal time as well. Next in his group, we have got Mr. Arvind Bodhankar, who needs no introduction. Dr. Arvind Bodhankar is a very sought-after speaker, and he's currently the Joint Executive President, Chief Sustainability Officer at Ultratech Cement and Aditya Birla Group company in this project, and he also contributes to industry level and various forums in one way or the other on matters of CSR, sustainability, HSC, sustainability leaders, and all these things he has been contributing in a big way. Second speaker is Thara TK. She's the co-founder and CEO of ESG Minds. For successful implementation of ESG and SDGs down the line, government and private sector requires huge enabling capacity, and that's exactly what Thara TK has done under the chairmanship of Mr. Sailesh Bhakti by co-founding ESG Minds. She is a true ESG thought leader, strategist, solution architect, contributing in the system across corporates, governments, and academia as well. With over 2 decades of career experience with TCS as head travel, transportation, and hospitality in TCS Canada as the head, and also in North America, she brings huge depth and hands-on experience in travel, transportation, hospitality, and domain with the global customers across US, Canada, Europe, and various markets. Mr. Ravi Krishnamurthy is our next speaker in the same group. He brings very rich experience. Ravi is the president at SBI Life, and he is very, very sought after speaker and is very passionate about ESG, sustainability, and SDGs. 37 years in building profitable BSI businesses across banking, insurance sectors. He has worked in SBI, he has worked in ICICI. And
the interest of time, it may be useful to continue with the session. Let's just jump into it because otherwise we will be waiting for each other. Please take charge. Thank you.
Thanks, Shailesh bhai. Thank you very much. I think, and my special thanks to IOD, Vikesh, and Shailesh bhai. You have given us the opportunity to express our views, especially on this honorable platform. Thank you very much. So I'm starting with the note that, especially on BRSR, what this panel is going to describe, what this panel is going to cover. So my panel here is going to cover the journey of BSR, when this journey has started in this country, how the corporate or the business houses has taken it forward, why we are talking about the BRSR reporting, BRSR status in the various industries, benefit and challenges in the various industries while implementation of this process in the business houses, and key drivers basically. What will be the benefit to the businesses after this reporting and once this will get implemented in the Indian houses. So in this panel, first of all, I would like to cover that you can say the initial journey will be covered by me. And why this reporting, that's also been covered by me, and the status in various industries will be covered by Thara TK, that is, I think she's covering the overall industry. Dr. Arvind is covering the manufacturing space. Ravi is covering financial industries, how this BRSR is going to impact these industries. And benefits and challenges will be covered by the various eminent speakers during their turns. And the key drivers in the various sector will be discussed with them. So I'm starting with the journey. That it's not that BRSR or the BRR has started, you can see the recent back. The journey has started 12 years back when MCA has announced the, you can say, the voluntary guidelines to the industry houses in 2009. In June 2011, UN guiding principle has come on business and human rights, where India has given the endorsement at that. And June 2011, MCA has given the new framework for the social and environmental reporting. 2012, MCA has asked first 100 industries to report the social and the environmental work, what they are doing. In the year of 15-16, I think MCA has extended that limit from 100 to 500 corporates to list this, you can say, the social work, but till now it was a volunteer. There was no mandatory cap on that. 2018, I think MCA has formed one committee under the leadership of a joint secretary. That is on 14th November 2018, and the assignment to that committee was to find or finalize the framework that how this, you can say, the business responsibility work should come into the platform, come into the picture in a sustainable reporting format. So there it starts. You can say the BRSR, and that committee has come with the various recommendations, right? And once that committee has come with the various recommendations, same time in 1920, MCA has asked the top 1,000 corporates to report the business responsibility, you can say the outcome and reporting along with their annual report. Once that committee has given that report on 11th August 2020, and they have come up with the certain recommendations. And those recommendations are that all the business houses which are reporting now, they will have to fill the comprehensive BRSR report, whereas those who are not familiar with this reporting, they have to adopt another format, that is a light version, and start reporting that. They had come with the recommendation that whatever the reporting data is getting collected, it should be connected with the MCA portal, and there should be a formation of index of sustainability for the corporate houses, so that whenever there will be a procurement, you can say the government procurement will take place, the preference will be given to those business houses who has got a good track record or who has got a high scoring into the business sustainability index. And they have come up with a recommendation that there should not be any unnecessarily compliances in that report, so that the business should feel difficulty in that. And it should be in terms of all the language and easily understandable. So those are the, you can say, benefit, and the committee has given those recommendations, and this is the entire journey of BRR to BRSR. So now we come to that. Why this reporting? Why this reporting has become mandatory now? Why it's taking so much speed now in the business houses? Because the key driver of these BRSR reporting structures are not the regulator right now. They are asking that from next year it should be mandatory, but right now they are not the key driver. The key drivers are the investors. The key drivers are the society. The society and the investors are pushing the business houses that if you are not doing sustainable business, I think we are going away from you. The market, the business houses business houses are not going to see the market capitalization or the valuation there. You can say the organization, if they are not approaching the sustainable base. And this committee has also given a recommendation that all the company has to work on a 9 pillar of ESG, and all the, you can say, the element under those 9 pillars has to be reported in this reporting structure. They have asked the time that it should start from next year and should get completed in the next 5 years, but not make the mandate. So now, since I have got my panel members along with me, so I will request. I'm not seeing Tara in the panel right now. I think she got disconnected. So
she's come back. We can get her in. She's just come back. I can see her.
Can you hear me? Can you see me?
Yeah.
Yeah, Tara. So yeah.
Thank you.
Yeah.
Right when we started, I got disconnected. Thank you.
No
Thank you,
problem.
Naren.
Welcome. Welcome. So what I request you to take you through us to the, you can say, the entire industry spectrum, that how BRSR as well as the ESG is doing in the entire industry space, and what are your view in that, that how you see that how it's going to fare in the next 5 to 10 years.
Sure.
So over to you, sir.
Thank you, Naren. You have brought the story to a point from where I can seamlessly take it and go to the next part of the story. Thank you, Naren. And thank you, Ayori, for today and this wonderful panel of speakers. It has been an amazing day so far. So coming to this topic of BRSR, we heard from the creator already, Mr. Amajit Singh. It was quite good to hear from why the reasons and the context under which SEBI has come up with the format, right? And then he also said the ball is now in your court. So I'm taking the ball and then reflecting back on, as one of the stakeholders and one of the respondents from the ecosystem, reflecting back on how we feel and how we see BRSR is. So I have 3 parts to this point of view that I want to share with you today. Number 1, about India being one of the first few countries to mandate sustainability reporting, right? So early this year, I was quite surprised to see in a report where India topped among 52 countries, wherein companies include sustainability in their annual reporting. And it was a report from KPMG, and it covered top 100 companies from each of these 52 countries in the report. And then I found the reason right behind that chart. And that was a comment from Mr. Santosh Jairam, which explained why we are there. It is because of the BRR, and plus because of the 2% spent mandated on CSR and the related reporting that has secured us that position in that there. And then yet in another one more report from, I think it is Carrots and Sticks, which again position India among top 20 countries having maximum number of sustainability reporting provisions. So the point that I'm trying to make is India is undoubtedly among one of those countries where we have very matured sustainability reporting practices. Now with BRSR, we are potentially going to win some more of those top positions in these studies, right? Then many people may ask this question, was this really needed? Do we need really to do this? Are we overdoing this, right? After all, we are one of the lowest, we have one of the lowest per capita emission, carbon emission in the world, and lower than any of the developed countries. Why do we have to push it so much, right? And I have tried to ask this question to myself. And my answer is, and because I often get asked about this, I get challenged about this, why are we pushing it so much? Sustainability, why is it on the top of the world right now? So I had to try and find the right answers for myself. And my answer is, yes, absolutely, this is in our best interest to get started with this initiative right away for the ultimate reason of climate impact, climate change. So climate action to me has two parts to it. Part one is about how we bend the emission curve, right? And part two is about how do we prepare ourselves to face the consequences? How do we prepare ourselves to build the resilience that we need, or build whatever is the consequences that we are going to face? How are we ready for it, right? Particularly, very clearly, very important for developing countries like us. I'm not sure how many of you will agree with me when I say that a better planet is a hope which is at least 100 years away. The target that we are trying to reach, right, the 1.5 degree and the 2 degree that we are trying to achieve, which is at least 4 or 5 times worse than where we are today now. Even if the entire country say we do not have the right set of solutions and commitments from all the countries to meet those targets right now. Let's assume that even if we do take some unprecedented measures, the world comes together and we are able to meet that, it's going to be another 4 or 5 times worse than where we are today. So the consequences are given in terms of food insecurity, water scarcity, in terms of the related social and economic imbalance, it's going to come to us. So we need to prepare ourselves with right set of solutions, right set of actions, right set of technology to face these, right? And without being dependent on any other country. And that's exactly why BRSR was important for us. And it is the right move, and it's rightly positioned. It has a great potential to take us through our net zero economy journey. So that brings me to the part 2 of the point of view that I wanted to share, which is how has life changed from BRR to BRSR? So Mr. Amarjit Singh has already given his perspective. If I go a little technical on that and reflect back as a consultant on that, for us, BRR and BRSR, when first look, they are all built on the same set of principles. Where it has significantly become different is the way it quantifies things, right? For a comparison, if I want to just rate these two structures, BRR would score about 2 to 3 on a scale of 10, and BRSR would score about 7 to 8 in its ability to quantify and qualify things. From a coverage perspective, again, they both are covering same towers, but BRSR has gone extensive in the tower of environment, human rights, community, and employees. And if you want to compare with where does it stand with respect to global frameworks, like any other report, BRSR is also a subset of GRI, which is the mother of all reports, right? And last year, if you remember, World Economic Forum had put this, has brought together the big fours, and then they made the first ever attempt of consolidating the reporting frameworks available there. And BRSR almost 100% overlaps with the top 21 mandated requirements, disclosures that is put in place by World Economic Forum 2. And it has a great overlap with TCFD, which is the most followed report of when it comes to climate action. So yes, it is very much in line with the global disclosure standards that we have in place. So in a nutshell, it is a great framework which can help us compare the businesses on their approaches and the performance. And coming to the third part of my conversation, which is about how will BRSR help us in reimagining the annual reporting? So in the last few years, if you see the introduction of integrated reporting and the whole focus that we have brought onto sustainability, annual reports are immensely transformed in the way they tell the stories. right? And as a consultant, I keep looking into the annual reports very regularly to see how the story is being narrated and how do we decipher the communication through the eyes of different stakeholders. And from that point, the top 3 things that comes to my mind, how BRSR can support the reimagination of annual report will be: number 1, truly bringing an integrated storyline. So today, most companies are comfortable or they prefer to keep their sustainability reporting separate and their annual reporting separate. These are 2 separate reports from them. Although it feels fine to look for additional details in a separate report, the 2 issues that I face with this approach is: number 1, when the information is represented in 2 different reports, they often tend to contradict each other. So which is a huge hit on the trust factor. And number 2, some of the greatest sustainability messages get sidelined onto your sustainability reporting. If sustainability is so important for us, if there are so many stakeholders looking into it, why do we want to miss it from our annual reporting, right? From that point of view, an integrated storytelling covering the financial and non-financial dimensions will go a long way in building that big picture and building that trust. I totally believe that BRSR has the potential to establish this practice of talking sustainability very comprehensively and conclusively and completely within the annual report itself. That could be one change we will see in the coming years. Number 2, presenting relevant and relatable information. Today, whether it is your traditional annual report or your integrated report, the choice is left to the report writer to decide what is relevant and what is relatable. Even integrated report, it's like a big bag, right, with a lot of pockets in it. You can put the information into each or any of the pockets following a guideline. So it is not prescriptive, it is just principle based. Whereas BRSR is a set of very prescriptive disclosures. And thereby, it is going to completely complement an integrated report. And that will be nice combinations to see the principle-based structure and prescriptive content within it. So it has all the potential to take us to that level. Number 3, how BRSR will bring consistency. Consistency of messages, not only within your annual report, but across all the communications channels that we look at, right? Earlier, we didn't have enough data to see whether the messaging that is written on the story is true or not. We have to believe it or perceive or makes our perceptions, right? Now, BRSR is going to give us the data and we need to write the story complementing with the data and it cannot be contradictory. And if it is contradicting, that will be one of the ways that it will be looked at, that it is greenwashing. So BRSR is going to hopefully push us to give consolidated and complementing story of messaging and data. So eventually, when I look at it, if there is action, the story naturally flows. It is interconnected, it is integrated, it is complete, it is concise, it is clear. So it looks like action along with the storytelling, a strong bridging to communication is the way to go on annual reporting. So that's all I wanted to share about BRSR. Thanks, Nari.
Thanks, Sarah. I think you have covered it very comprehensively. So our next panelist is Dr. Arvind. Dr. Arvind comes from the manufacturing space. And I will request Doctor to cover all the manufacturing, journey of BRSR, along with the, challenges and the benefit in the manufacturing industry. So over to you, Dr. Arvind.
I've already covered a lot on BRSR. And there is hardly anything left out for me because it will be a repetition. But as you asked the question, what are the challenges for the manufacturing industry on reporting? Let me try and answer that in a very brief manner. I started my journey as a sustainability professional somewhere around when the Kyoto Protocol was signed up. And I have been struggling to find the right definition of sustainability. And then eventually I found out a definition. Sustainability is creating value for the stakeholders. And manufacturing sector has, I think, highest number of stakeholders, maybe 8 or 9, right from your suppliers to, consumers, to people, to community, to regulators, to investors, shareholders, 8 or 9 to union, opinion makers. So you need to satisfy each of these stakeholders. Then only your business can be sustainable. And you just think of, let's say, for example, if your people are not satisfied, what will happen to your business? If your suppliers are not satisfied, what will happen to your business? And this satisfaction, while there have been number of efforts being taken at the manufacturing level to keep this to keep the stakeholders satisfied, maybe in a structured manner, maybe knowingly and unknowingly, the word which was used earlier, unconscious sustainability, unconsciously, manufacturing sector has been trying to do that. And the one tool which we have to communicate the value which we have created is the sustainability report. Manufacturing sector has been pioneers. I was fortunate to have worked with companies like Birla's, Tata's, Cadbury's, who have been pioneers in publishing the sustainability report. In fact, Tata Group published the first sustainability, Tata Automotive published the first sustainability report way back in 2001, even when number of global players did not publish that. And also now also I have been almost 50, for the last 15 years, I have been publishing sustainability report. Sustainability report, of course, it was voluntary kind of thing. And I was just struggling, I participated in many panel discussion, maybe at National Stock Exchange, maybe at Bombay Stock Exchange. And every time when the question used to come, why people are not proactively reporting, doing the sustainability reporting. And a couple of years back, the number was somewhere around 78, 79. I don't know today's number, but it's still around or less than 100. And not many companies are coming forward and reporting. And then I tried to drill down on this and found out that, first of all, the challenge which these companies are facing is it takes enormous of time to prepare a report. And initially, especially when you are new to the sustainability reporting, it takes minimum 3 to 4 months to collect the data. And if you have multi-site organization, it may take much more than that. And then after that, you need to get validated that data, and right way of communicating also is very important. So initially, if you are working on this, it may consume easily 7 to 8 months of your time. The first report may come up somewhere around October, November. That's what I had seen. So a lot of time is consumed. That's one area of constraint or the challenge which people are facing. The another area of challenge is, is around communicating. Transparency. In fact, I keep sharing this anecdote. A student who is not bright enough in the class, and if the students have been asked to disclose their last year's performance or the percentage, and if it is voluntary, perhaps that student may not disclose. But if the moment it is made mandatory, then he will have to disclose that I am a 45%, 48%. But that will embarrass him, and that will in fact challenge him to work, and then eventually we may find that he may come out to be a bright student. So manufacturing industry has to look into. Many times I have seen that when we have to report the posh related cases, when we have to report the corruption related cases, when we have to report the business code of conduct related cases, we are reluctant. And the questions are being asked, is it mandatory to do that? Is it necessary? Can you avoid doing that? And has somebody forced you to do that? That's kind of questions being asked to the sustainability professionals or the company secretaries or whosoever is in charge of publishing those reports. So manufacturing sector has that challenge, on communicating and how it will be perceived by the stakeholders. Now, not necessary that every time this will be perceived in a very positive manner, or so that's one challenge, or that's one barrier for manufacturing companies to communicate on the sustainability, or to do the sustainability reporting. But having BRSR made mandatory, now of course you have to keep on communicating on that, whether you are good or bad. And I can clearly see that if you are a bad one, initially you may remain bad, but that will definitely push you to improve within yourself, and eventually you will emerge to be a winner one point of time. That will definitely attract investors to your organization, and also that will provide you a better brand image. So I think that's the manufacturing sector needs to look at reporting on BRSR or sustainability reporting. I'll take a pause, and if you have any supplementary question, I can answer that.
Dr. Arvind, I have got another question that in the coming time when investors are pressing the, you can say the business houses to, you can say disclose all their, all the numbers in statistical forms. And once they are comparing the performance of any business houses and the manufacturing takes a bigger space in any business, I'm sure that the future will be entirely different, and there will be a lot of pressure on the manufacturing operations. So how do you see that in future? Whether the Indian manufacturing houses or the Indian manufacturing setups are ready for that, or it has got a challenges yet?
So it has got a challenges, and as Ms. Reena was talking about, if we want to meet the climate change related commitments, we may have to spend about $170 billion year on year to meet those challenges. Obviously, those companies who are not doing business outside India, or those who are doing businesses within India, and they have to, those are dependent on technologies, they will have to pass on this financial burden to the consumers, which are the Indian people. Now that will be in the form of price hike, and ultimately it is going to impact your own economy. So that's the challenge is always going to be there, especially for the Indian companies. And that's why when we talk about net zero and all, of course, this is not the platform where I should be talking about it, but there has to be a common but differentiated responsibility, and which I have been advocating for that. And you need to provide the financial assistance to the Indian companies to meet those commitments. But definitely it is going to be challenging when they ask, especially to fund the companies, if they want to disclose more and more on this thing, it's going to be challenging for Indian industry. But there are way out of this, and my own company has done it. We had floated up 400 billion sustainability bond very recently. We are the first in India to do that in dollar denomination, and our issue got oversubscribed. So as long as you show the intent, as long as you show the roadmap to them, they believe in you, and people are subscribing to whatever you're doing. I can tell you our issue got 3 times oversubscribed, and most of the UNPRI signatories have made investment in our company. You name the one, CAS 100 companies have invested. So there are ways and means to handle that also, but there is definitely going to be a challenge.
Thanks, Dr. Arvind. Thank you very much. I think sustainability is not only a challenge, but I think it's a revenue generation stream also in future. If the business can translate it nicely with this word, I'm taking the ball to Ravi. Ravi, please, I think, give your reflections, especially on financial sector. How do you see the VRSR effect, distillation, or the benefit to the financial sector? And what's your reflection, especially the implementation of this concept in the financial sector, especially in the insurance? Over to you.
Yeah, thank you so much to the Institute of Directors, Shri Vikesh ji, and all the speakers, the eminent speakers. And I'm really happy to be in of very distinguished speakers, including Shailesh Haribhakti ji, and then our industry leader, Mr. Kumar's presence here has definitely added a lot of value to us. I had operated in both the public sector and the private sector, banking as well as the life insurance sector. And when I looked at the BRSR reporting, and the topic today was reimagining reporting. So today, integrated financial reporting through the IFRS is becoming a reality in terms of numbers, in terms of transparency. But what does BRSR do to the sector? It brings a dimension of quality. And in a banking and insurance sector, which is basically a sector where the product is not tangible, unlike manufacturing industry, people perceive the product, people perceive the offering over a period of time. At the time of acquisition, at the time of onboarding, the customer perceives our offering differently. At the time of maturity, he perceives it differently. At the time of various servicing, during the life cycle of the product, is it differently. And therefore, the intangibility of the service of the product in the banking and the financial services sector, particularly banking and life insurance, because life insurance is pretty long term. And if you look at sustainability, and rightly Mr. Kumar mentioned about sustainability becoming an unconscious effort in because by definition, life insurance contracts are long. They are lasting more than 15 to 20 years. And many a time, at the time of maturity, the customer has even forgotten what was promised to him at the time of buying the product, to that extent. And people don't read long contracts. In that case, what BRSR does is brings to the value of trust. How do you quantify trust? People talk about brand valuation, but in this BRSR, you have an excellent opportunity to actually strategize how to build brand value of an organization. So while the history of the past is told in the balance sheets, the future is contained in how you look at the brand of an organization. And the excellent opportunity of BRSR is, Mr. Amarjit Singh rightly mentioned, that the ball is in our court, the reporting format and the matrix is given. But then what do you do with that matrix? And I would say the best way to do it is, years back in 2011-12, a lot of persuasion came to us as a young fledgling company when SBI Life was growing, that we felt that we should apply for the Ramkrishna Bajaj National Quality Award. While it was a huge introspective journey. An introspective journey where questions get asked by ourselves. How do we treat this? So in the entire BFSI sector, there are three main components. One is the customer, which is most important. The second is the distributor, is the society at large. And let me give you an example as to how leadership and governance play a very critical component in establishing brand value and establishing long-term sustainable trust with customers. And the way forward was, during the exercise with Ramkrishna Bajaj, we understood that there is no shortcut to this, but actually to start asking, how do we do this? What does the metrics tell us? What does customer, we usually look at, for example, net promoter score. But here in the process of learning, we realized that it is not the net promoter score that matters. What matters is, what does dissatisfaction tell us? And what is the various stratas of society telling us? If there are complaints, what does the lower profile customer tell us? What does the higher profile customer tell us? So is our understanding of the customer so as to be able to redesign our products, redesign our processes, redesign our offerings in such a way that it meets the aspirations of a wider segment. So some are customers with us, some are future prospects with us. And the society, when I mentioned society, the customer is a subset of society. Today, a few people are customers, but tomorrow, a whole lot of people, society is watching to see what do the customers say about a particular company and whether they're happy with the product. So I say that dissatisfaction, customer loyalty. Do customers buy only one product or do they buy more than one product? What is the percentage of people who buy more than one product in this company? That kind of tells us whether the loyalty index is being built with the company assiduously, whether people are willing to buy more than one financial product with a particular bank or an insurance company. Similarly, we try to see what is their claim payment record. How fast do they pay? What percentage of claims get paid? What is the turnaround time for payments? How is the responsiveness of the call centers? What is the responsiveness of the internet banking? Is the website, say for example, is it equipped to handle, say, Braille? It's very important because how do disadvantaged sections, how are differently people able to approach digitally an organization to buy a product or service a product? And these are, and the other things, suppose you're selling products, suppose you've got 14 products with you. What is the diversity to the customer base to which you're selling? Are you selling to a wide segment of customers? Are you selling a wide set of products? And that brings in a sense of inclusiveness, a sense of equity, a sense of fairness in the organization, that it is able to conceive a product to every strata of society. And that is the journey for most of the banking and the financial sectors, to see whether the products that they are offering is truly equitable, fair, transparent, and whether the product segment is able to cater to various needs of strata of society. And that is why that we bring into play when we work on sustainability are not around a total gross number, the total, what is the top line, but to see as to how many products are getting sold, what percentage of people buy what kind of products, how much of the people with the lower state of society, how much do they buy, how much micro insurance products are sold. This kind of gives understanding to the society whether there is fairness in the way the organization handles. Is it an organization which is niche, or is it equal, and is it catering to a larger segment of society? Let me come to distributors. We always think of a customer, but who's the person who meets the customer? In life insurance, for example, it is a distributor. So one of the ways by which you can look at sustainability is how many of the distributors stick to that organization. Do distributors leave? So one of the quantifiable metrics would be what is your percentage of attrition of distributors? How many distributors leave you? So if the distributors leave you, customers will leave you sooner or later. So what is the inclusivity of the distributor? Do you have distributors from all status of society to cater to all needs of society? Similarly, when you come to employees, what kind of training you give? What is the percentage of attrition? What is the percentage of career are getting? What kind of talent are you attracting? What is the diversity of your employee pool? Do you attract people from all the genders? Are you able to attract people from the women gender also equally well? Are you attractive enough to the semi-urban area? Are you attractive enough to get people from the rural areas also? Are people from all walks of life feeling comfortable to work with the organization? So there are metrics which you can develop in order to make sure that equity, fairness, transparency, openness of the organization is measured in quantifiable terms. And then if you look at the training, for example, in an organization, learning and development are one of the most crucial aspects. What kind of training do you give? What are the quantifiable metrics by which you know whether there is meaningful impact? And BRSR is all about measuring the meaningful impact of your products and services and of your presence in the society. And what kind of CSR you do? What are the measurable impacts of your CSR in terms of planet greening, in terms of carbon? For example, even in BFSI sector, though it's not a manufacturing industry, we don't do really effluents, but see, there are very, very innovative methods of helping carbon credit. One of the ways is what kind of investments do you do? What kind of lending do you do to industries? Where do you lend to? How much percentage of green industries? How much of percentage of your investments are in green bonds? And how much of or activities of social contribution, how much of it is for renewable energy, water conservation, or forest conservation, or tree planting? So in varieties of ways, in CSR, in societal, as well as distributed development, in terms of customer acquisition, and in terms of green initiatives, in terms of digitization, which our LIC chairman so well expressed, that a simple initiative scaled up with the right intent has created so much of a big platform that when the COVID epidemic came, I think work from home became very easy for the banking services sector because they were very well prepared. And I would leave one point to think. Every reporting, every new regulation can become a mere reporting or could become only a statutory mandatory reporting unless the organization itself intrinsically believes that this is a wonderful tool for me to reimagine my reporting strategy around that. I would pause for a minute to request Mr. Narayan if he has any questions to ask me on how to make this more valuable for us.
Thanks, Ravi. I think covered very comprehensively. And my questions to you is, am I audible?
Yes, sir.
My question to you that, see, your industry is entirely different than the manufacturing setup where you can say the emissions are there, effluents are there, and they are generating other waste. They can work, you can say that tangibly people can see that. But how, once this reporting will be mandatory to your organization, how it will display it as a benefit to your industry? Can you describe that?
So I was going through a few sustainability reports of both Indian banking and insurance companies as well as global companies like New York Life or Tata AIG or Citibank. And what I found was very interesting that while the creation of carbon may be very less from a banking sector or an insurance sector, the ability to fund specific green energy projects is tremendous. For example, perhaps I saw one of the speakers speak about carbon calculator. I think if banks were funding a versatile set of industries, you could actually get to know what kind of carbon get created, and then decide how much carbon creation is being caused by the lending, and then decide what will be your CSR focus as to how much of that will get compensated by way of your CSR activity to reduce that or compensate that. Though the banking or the insurance sector per se doesn't create carbon, its lending activities to manufacturing industries can be dovetailed in such a way it encourages more of activities towards green energy. And the other thing which occurs to me is, in order to make this more meaningful, one of the best things is the reporting flows out of your strategy, and not that at the time of reporting you retrofit your initiatives into the reporting. In fact, to be very fair, I was looking at most of the reports in recent time, which is anyway today voluntary, but I was watching how the ESG reports currently get done. And what I felt was that you sometimes, it's an afterthought to you that whatever initiative I took was anyway a ESG initiative. I think it should be the other way around, that you project into the future the board strategy specifically on ESG, specifically on BRSR, and voluntarily come out with a set of initiatives that you will take for the next 12 months and measure against the set of initiatives that you are yourself committed to. So in that way, what happens is the reporting becomes not a formality or a sudden afterthought of retrofitting an initiative into the report, but more effort that you will create sustainability for the organization, you will create sustainability for the customer and to the society at large.
Thank you. Thank you very much. I think let me conclude now. I think we are also hard pressed with the time. So what we are saying that thanks Dr. Arvind, thanks Tara, thanks Ravi Krishnamurthy to covering this topic very comprehensively. Thank you very much. And in the conclusive note, what I'm concluding that once this reporting will become mandatory, I think the key driver will be the regulator and the investor. In previous, we have seen that in certain area only the regulators are the only drivers because it was not connected with the financial outcome. But the BRSR report is connected with the financial outcome because the investors are going to press you very hard in the investor meet once they are doing the benchmarking with your competitors. And you cannot fiddle with this data because this may become contradictory because you are filing somewhere around 650 to 700 inputs, and one input is related with other one. And once you are filing something, other hand you are getting compared with your competitors, so you have got many responsibilities in the market. So what I am anticipating that it will be implemented very fast as compared what we have seen, which is being driven by the regulators, or you can manage the regulators. So that will not be the case in case of BRSR reporting. So with this word, I'm concluding this panel discussion, and in the end, I'm thankful to Vikesh Bhai, and I'm thankful to Shailesh Haribhartiya, and thanks for the opportunity which you have given to us to present our views on BRSR reporting and the timeline. Thank you very much.
Fantastic. Thank you very much.
Thank you, Jayavakash. I'll request Mr. Haribhakti to kindly do a summary of the sessions that we have had, these two sessions and the earlier inaugural session. Sir, please.
Thank you, Vikesh Bhai. I will also try and answer all the questions in the chat box. So let me give you all, I started with 3 things that we need to do as citizens of India. Let me end with 3 ideas that we as a group, as a cohort who have attended this seminar, spoken at it, can do. The first thing we can do is sell the idea in the way that this last panel talked about it to our boards by actually giving them what might be the equivalent of a TEDx talk. So get ready for giving a TEDx talk to every board, every one of the 1,000 boards in this country, which will have to voluntarily go for BRSR. That's my first thought to share with all of you. And we need to have a whole cohort of people who will actually give this TEDx talk. So each one of us has the chance to put their hand up and say, I will do it. The second thought is that we need to truly believe that the future of all reporting is integrated reporting, and that the entire structure of accounting and reporting will switch to gathering data sets and making sense out of them in the context of the 6 capitals of integrated thinking. And so people like Milind should put their hands up to say that we will create the ERP of ESG. That is what the world needs. We need a complete methodology, a set of tools which will enable us to capture this. Because in 7 years' time, all accounting reporting will become continuous. Nobody will need to have a quarterly or an annual report. What we will need is once in a year an integrated report, which talks about how have you influenced the 6 capitals. And that's the basis on which people will join your company. That's the basis on which people will invest in you, divest from you. Governments will collect revenue from you. All of that will get automated because it will be a world full of repositories and quantum computing and brain-computer interfaces and all the rest of it that Milind is a better expert on and all of you are better experts on. And the third thought I will leave for you to consider is that we need to create a Netflix of sustainability. You know, you can't explain all these dense stuff that we talked about throughout this 3 hours to the last man standing at your gate. You need to give him a Netflix-like picture, which tells him how your heart goes out and touches him and makes him safer or her safer. Why do you care for her health? How do you make sure that you will be fair to everybody? How will you make sure that everybody gets a chance to actually participate? That's the story they want to hear. It's a Netflix of sustainability that we all need to create together. So those are my 3 thoughts. Now let's look at what we can do with the BRSR. Okay, so I have an offer from an organization in Singapore, which is doing this stuff in Singapore. The government there has mandated them to set up a platform to which the entire Singapore community will upload their GRI reports. Okay, and then rather than just depending on a score which is so non-transparent and so non-discriminatory, you would be able to granularly decide, like Dr. Bodankar talked about the 400 million issue. How did the givers of that money actually decide that $400 million are deserved by his organization? They did it because they were able to diligence that organization's actual performance. Now, what this platform can do, if we get all our BRSR reports onto one platform, is to enable people to have much more than just that score, which is very hard to decipher. It's not discriminating, to actually take the calls on who should be supported. And granularly, we should be able to, in a descending order of actual relevance and future readiness and future orientedness, we'll be able to rank all our 1,000 companies. And then we will go on to the 18.5 lakh companies which exist in India. So I see that as the future of sustainability reporting. There's a whole amount of fabulously interesting work for everybody to do. Let's get engaged. And yes, BRSR is a subset of GRI. GRI has also to be mapped to SASB because GRI speaks to a wide range of audiences, whereas SASB speaks to the financial community and it is totally domain driven. So that's the way the frameworks in the world have evolved. But fortunately for us, the Value Reporting Foundation is going to bring both the GRI and the SASB together, and we will have a single set of things to do in no more than 1 year. That's the timeline, I believe, that we'll have the Value Reporting Foundation's unified protocol for communicating with all economic interests. And by that time, we would have seen the birth of the Sustainability Accounting Standards Board, which will be a subset of the International Accounting Standards Board. So in all aspects, we will have uniformity across the whole world because everybody who had got into the act of setting up standards and giving guidelines, giving all of that, has come together. And nobody wants to say that this is only my domain. I think the final thought has struck the whole world that we are in this together. So let's stay with that thought and let's work on that thought because this is our planet. Let's save it. Thank you.
Thank you. Thank you very much, sir.
Thank you.
So I think as all good things have to come to an end also, but this one will continue even if we are closing it today, as Mr. Haribakshi has invited everyone to stay connected and to go forward on this. I think this is going to be a never-ending journey. Thank you very much. So my word of thanks for all our guest of honors, chief guest, keynote speakers, all the panelists, all the participants, and everyone who has made this day so very successful to all of us. Thank you very much to all the sponsors, LIC, NSDL, and NST, Century Pulp and Paper, Birla Estates. All of them have supported us so hugely. KPMG coming forward with Santoshji and all other speakers. I can't name each and every speaker because it's going to be for shortage of time. So I think I can close here now and thanking everyone and the team IOD Mumbai and team IOD in Delhi and so many other people who have made this conference such a success. Thank you very much, everyone. Look forward to meeting you next quarter for RMD Mumbai's regional program in the coming quarter. In between, tomorrow we have another very good program where Mr. Salish Haribhakti is going to join a very eminent panel of speakers. Tomorrow is a very, very special day for IOD. We have a very good program. Please join. The link has already been sent. And yes, strategic foresight for boards shaping the future. It's going to happen tomorrow, 3 o'clock to 7 o'clock. It's going to be very, very interesting, very amusing, very challenging program. I would urge all of you to please join and listen to Saleshji in his futuristic mode. This is his sustainability mode. He has another mode of being futuristic, and he does give good hints, guidelines about how the future is going to shape up for the corporates, for the boards, and that's what now corporates have started looking up to him. Like there used to be sessions by Nani Palkhiwala on budgets. I think we'll have to organize sessions for Mr. Haribhakti on innovation and on future. Thank you very much, everyone, and we look forward to staying connected.
Thank you.
Thank you, thank you, thank you. Thank you, Team Mumbai. Thank you, Team IOD Delhi. Everyone. Thank you. Play the videos, please. Yeah.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
So please join tomorrow, everyone. You are most heartily invited. Thank you so much. NSDL slide, please. Yeah. Okay. Thank you so much, Ravi. Thanks, Manoj, Preeti, Sharad, everybody, Purnima, and Anup sitting in UP, wherever you are. Thank you very much, everyone.